Welcome, everybody. Welcome. This is the webinar with Trade the Pool. I'm Steve Tileman. We're going to be talking about identifying long-term bottoms today. So, the art of major market cycle recognition. We're gonna be talking about a lot because there's a lot to talk about regarding this, especially right now. There are some sectors that I think qualify for this. We are going to be talking about that. Welcome. Seeing some comments already. Good to see you in the chat here. The Piper, Austin, Coy. Good to see all y'all. How we doing? Everybody have a good week? It's been a fun one. Okay, we're just waiting for a few more people to come in, and we will get on into it here. Welcome. Thank you so much. I appreciate you coming on in. We are going to be talking about long-term bottoms. I think there's some real good contenders for this right now. I think that with the quarterly OPEX coming up, we're going to be seeing a lot of cyclical movement starting. We'll see that pick up at the end of the year. That's always the biggest cyclical change. And that is how we caught China last time. We're looking at China for extension right now. We're looking at a lot of rate sensitive baskets. So we're going to talk about all of that. But yeah, it's going to be good. My camera needs a refocus. Thank you. I'm working on getting a whole new setup here. So bear with me for the next couple of weeks as I get a little more professional. I'm still a relatively new streamer here, so appreciate y'all bearing with me. Dale Nash, sideways but good. Understood. I hear that. Jesus, good to see you in here. Jesus, good to see you. All right. So I think we got people in here. Let's get started. Let's get on into it. So long-term market bottoms. Let's get into the presentation. Here we go. Okay. Let's get into it. We're going to be talking about a couple different things. So we're going to be learning about the technical focused framework, about how we're going to identify these long-term major bottoms on any time frame. But, we're going to be focusing on monthly and weekly charts here primarily because we're trying to catch this cyclical rotation. So there's a lot of sectors that are really beaten down and unloved. And when you have such bullish sentiment, the market is going to look to catch up, for the laggards to catch up with the overall market. They're going to be looking for places to put money into to play that catch-up game. Since this whole rally up from the correction, institutions have been relatively underweight. It's been really interesting to see that because retail has been actually very quick to buy the dip. As you know, that's what we do, guys. We buy the dip, we hold. So we've actually been outplaying the institutions so far. So they're going to be looking for ways to catch up. That's why we've seen these screaming rallies and things like ARC, for example. These we can call them questionable companies that have their they have a repricing going on because of this kind of cyclical rotation and the cheapness of money right now. So for that same reason, we're going to be looking at sectors like XBI and all of that. And that's why I kind of thought this was a good topic to talk about right now. So yeah, we're going to look at the technical underlying or framework underlying, how to actually identify these. We're going to be talking about price action patterns that'll kind of signal the capitulation and the exhaustion of sellers. And this works for, individual stocks as well as sectors. We're going to be talking about momentum and volume and how we can use indicators for those to essentially reveal when selling pressure is exhausted, because that's what we're looking for, right? We're looking for sellers to finally step out, for shorts to finally close their trade and say, all right, we made our money, and we're looking for the buyers to base out it for a considerable period and then finally push out of there, push out of that base. So that will be very clearly indicated by volume. And there's some good momentum indicators as well that we'll talk about. We're going to talk about how to distinguish between dead cat bounces and genuine reversals. This is something that's super important because so many people don't understand the actual requirements for a basing process. So they will get caught in these surges to the top of the base when the base needs to still be reformed and retested multiple times on the bottom. So they get caught basically buying a surge and holding underwater possibly for a very long time because these stocks still need to base. So you see this a lot in really explosive parabolic names that get beaten down after that. Stuff like GME or whatever else, any kind of meme names, anything like that. Carvana comes to mind. Carvana is a great example because after years of basing, it had crazy explosive upside potential. And almost everybody was too afraid to touch it because it was in this long-term basing process of rejection at the highs. So it's really important to distinguish between those. And we're going to talk about that for sure. We're going to go over some case studies. If we have time, we can get into real examples now as well that are setting up. And that should take us to time. Any other time we can fill with questions and all that good stuff. So I think there's some good stuff in here. Let's talk about part one here, the universal nature of market bottoms. So these are going to be things that all market bottoms have in common. So the details are going to be a little bit different. For example, for sectors, we're going to be looking for less steep percentage pullbacks compared to individual names, but the same principles apply. So really useful to know. Just checking comments here to make sure my sound's working. I have PTSD from last week. It's great to see you in here, Talk. Always good to see you, brother. All right. Let's keep on going here. All right. So what makes a major bottom versus a temporary bottom? So there's a few that we can look back to for kind of case studies here. But major bottoms are going to share characteristics regardless of what you're analyzing. So whether it's individual growth names like Netflix in 2022 is a great example, or Amazon a little bit earlier in the the .com crash. So that 2001, 2002, whether it's cyclical sectors, like energy in 2020, banks in 2009, tech in 2000 to 2002. Like I said, they're all going to share the same qualities and characteristics here. So, and including entire markets. So these characteristics are going to include a peak to trough decline of about 60 to 90% for individual stocks. I believe it was Mark Minervini who said 80% of previous leaders will have a 50% decline, and 50% of previous leaders will have an 80% decline. So if you look at previous leaders from the 2021 big major rally, we can talk about things like Upstart, Affirm, Peloton, stuff like that. They had these insane parabolic moves, and then they almost all declined roughly 80%. So this is tried and true. You can go back to any major market cycle and you'll see this playing out. And this is why it's really important to not get stuck in narrative trades and just be so sure that your stock is going to keep on mooning. It might keep mooning and you might be dead on about the narrative, but that could be holding, through a 70% drawdown before you realize a new high. And wouldn't it be better to play the technicals and not get caught in that narrative trap, sell for a massive win and rebuy when your fundamental name is actually at a value again, or a discount? So that is definitely something to keep in mind for long term. No matter how strong a name is, when the move is over, it will need to rebase. All stocks need to go through the phases of, basing, accumulation, breakout, and then, distribution, fall, then they need to rebase. And it's just the kind of natural flow of things. So never try to fight that, no matter how much you love a stock. I've seen this just time and time again over the years of people getting hurt because of that. So the sectors overall, they're going to be 40 to 70%. So like I said, not as steep of a decline, but still pretty significant. Still pretty significant there for sure. And, we see this especially pronounced in more speculative sectors. I'm thinking stuff like TAN, solar energy, or regional banking. That's been swinging wildly over the past, decade, just with macro events and all that kind of stuff. So a more resilient sector like healthcare, you're going to be looking more for like a 30 to 40% pullback overall before it starts to bottom. So broad markets, we're looking at 60 to 35% declines. It really does depend on the context and what brought the rally to fruition in the first place. Like if it's primarily tech based, then you could expect a steeper decline than if it's a broad-based rally with, a lot of participation in stuff like financials and healthcare and energy, perhaps. Who knows? And then the last thing is that you need to have an extended duration of bottoming, before this is actually occurring. So the you need to see at least a year, but usually 2 to 3 years of price trending down before it's, actually ready to reverse and move up in a major cyclical way. So these are the common characteristics of the magnitude component. So this is in terms of like how big the moves are. Going on to common characteristics of the exhaustion component. So we're going to be talking about the common characteristics of how these names reach seller exhaustion and start reaching an equilibrium with buyers and eventually have buyers outpace sellers and push up off of the space. So that's going to look like selling pressure that becomes self-defeating. So it's going to be looking like high volume sells that can't find traction lower after previous high volume sells were able to smash down in price, and you had that confluence between price action and volume. If you see a divergence there, that could be a sign. Another thing is just in general, technical indicators will reach extreme oversold conditions at similar times simultaneously there. So you'll have confluence there. Maybe it'll be RSI on the monthly is at 30%, along with who knows. Take your pick of any moving average. Maybe you're trading into a 200 month moving average. Maybe it's a 200 week, some long term area of valid support. And you should be seeing, that exhaustion, that volume failing to push price lower around these areas. So volume patterns, like I mentioned, they're going to shift from panic to exhaustion. So like I said, panic looks like big red candles, big red volume. Everybody's selling. Nobody wants to be in this name, and there is no bid to catch. So price just keeps auctioning down. The auctions keep working, and price keeps pushing down. Exhaustion is going to look like failed auctions lower. So if anybody caught our market auction theory webinar last week, we talked a lot about failed market auctions. So that is when price tries to push lower or tries to push higher and essentially fails, and that provides a potential reversal. So that's all these together are going to provide what we're looking for in terms of exhaustion when we're looking for these long-term bottoms here. Let's see. Talk. I see some questions. I'm going to get to them probably at the end here because I think it'll be a little bit of a jolt for me to jump over to charts and then back. But I do have some names in mind or sectors in mind, so we'll talk about that. Okay, so the next component here is the recovery component. So we've talked about the magnitude of the moves and the exhaustion factor, and this factor is how they recover. So the initial moves off the bottom are going to be sharp and violent. They're going to be a sharp auction failure from sellers to push the price lower, and that's going to be met with buyers just overtaking the tape as shorts close out and they realize how oversold they are and how they're failing to make forward progress. So time to ring the register. To ring the register if you're a short, time to actually take a position if you're a long-term bull. So this shift in the tape will lead to these violent moves up. And if anybody's familiar with the Adam and Eve chart pattern, that's going to be a really steep bottom for the first low, and then the next low, usually a higher low, is going to be a nice rounded curved bottom. So that's referred to the Adam and the Eve bottom. And this represents the seller exhaustion, the panic, the panic turning into seller exhaustion, and then turning into genuine buys after the shorts close on that second bottom when it's more of a healthy long-term accumulation process instead of like a liquidation event. So that is one foundation for a very healthy bottoming process. So that's something you'd like to look for sure. So the next thing here is the retest of lows that will often occur within like 3 to 6 months. So you get that first big push up, and then usually you will retest to make sure that you are, essentially done trading in that range. So we're looking for essentially resistance or the point of control to flip to support on a back test. This is why it's important to not get too bullish on this first initial sharp move up, just because often it will not be the one that sticks, and you will get a better price opportunity. So if anybody's familiar with Wyckoff theory, this is going to be very relevant because essentially we are looking to get long in the spring, which is a formation in the bottom of the range, of the basing range, after it is pushed up violently and basically taken a higher, made a higher high in the base and kind of confirmed to some degree at least that there are buyers here. This is a range that it should hold, accumulate, and push out of. So after you get that spike up, that initial violent sharp move, then you get the retest, and that's the spring, and that is where accumulation long-term will be kind of confirmed, and you get the extension out of the base. So that's something we look for. And then the returns will often exceed previous bull market gains. If you are in a sector that the market is rotating to in terms of big money, institutional flow, then you should see quite significant gains there. Markets tend to go up. If you catch something at an institutional low and you catch that move, it tends to be bigger than the last one. So yeah, just in general, good things to know about the recovery there. And there is a fractal nature of bottoms that I like to talk about too. And so this is going to be a kind of confluence of patterns on different time frames. That's kind of what fractals mean in regards to stocks. So what that means is that the pattern is repeating at different levels, right? So weekly patterns in daily charts or monthly patterns in weekly charts. And this is something that I use all the way down to a minute chart in day trading, where, if I'm bullish overall on the higher time frames, often you will see the same patterns that occurred to make the stock bullish on the higher time frames occur intraday and set up for extension. So it's a really fascinating component of market psychology, or whatever you would consider it, but it's something to look for. Basically, when you're seeing these fractals in price action, how I interpret that is that things are moving along smoothly. Things are uh, moving along in a healthy way. Price is digesting and acting how it should, which should be a sign that it is ready to cooperate, so to speak, and not just get stuck in these chop boxes that frustrate people. Um, so that's kind of the gist there. The principles and the tools, like I said, they're same across all time frames, and that's kind of the gist of what fractals are. They are the same on different time frames. So yeah, moving on to part 2 here. Let's get into a little bit more of the technical framework going on, what we can look for in particular. So the core principle here is that price tells the story. So while fundamentals, they explain why something fails, the technicals are going to reveal when that fall is ending and when we can look for accumulation to start occurring and when we can, get long for the other side of that spectrum to occur. That, progression from the stage 1 base to the stage 2 expansion. Then there's the distribution in stage 3, the expansion down in stage 4, and then we're looking for that reaccumulation in the next stage 1 to turn into stage 2, and that's where we're looking to get long. So price action incorporates all the known information. It's taking all the information out there from all the parties that are able to trade the stock, that have any information. And why I'm a technical trader is because I could never hope to compete against people who have either insider information or they have massive resources to crunch data on a level I simply can't. Like, if we're talking about big banks trading desks or something, like they have algorithmic stuff I just don't have access to. What I do have access to is a chart of what all of those people with all of those assets and access are doing. And I can just follow them. It makes it so much easier. Like, they have to give hints essentially if they have to leave a footprint of what they're doing because they have to build a position with so much money. I don't have to do that. I can just recognize what they're doing and hop in. That's my advantage as retail. That's our advantage. So that's why I think technicals are so important. And what we're looking for in particular is going to be on a daily chart. We're going to be looking for RSI below 20 for extended periods of time. So not just a brief touch, but if for an actual bottom to be taking place. And then, for us to push out of that first, we need to sustain below 20 for a period of time on the daily chart. So MACD is going to be showing significant negative divergence, and then stochastic oscillators are going to be in oversold territory, and then they're going to be trying to push up out of oversold and failing. So that's showing that on a daily time frame, it is squeezing down, and it should continue that trend until it finds buyers on a higher time frame, like a weekly time frame or a monthly time frame. So onto a weekly chart confirmation. So now we're looking for RSI below 30, and that's more significant on the longer time frames. We're looking for that deeper discount at the 30 there. And we want to see the MACD histogram showing a deceleration in the selling momentum. So we want to see on the higher time frame, the weekly, even though the daily is still pushing down, we want to see a divergence on the weekly. The selling is starting to slow down. And then, the Williams percentage, if you use that, is going to be below 80. Any kind of oscillator that you use, look about 80, that basically extremely oversold. So in the monthly chart context here, we're going to be looking for RSI touching or breaking below 30, which is extremely rare. And that's like one of those really long-term buy opportunities where you just buy in your Roth. You don't worry, because if price fails significantly from this point, like we're in like a crisis event or something. And, you can't bet on that. You got to bet on mean reversion. And when price is mathematically oversold to this extent, it is just, the risk reward is too good not to buy. As long as it's something that is fundamentally sound, of course. Don't do this on some altcoin or whatever the heck, your buddies are trading. I don't know. It has to be a real company. But if it is a real company with a real future and it's majorly oversold like this, that's when we're looking for the long-term investment opportunities. So often you'll see undercuts on long-term momentum oscillators where they reach levels they haven't seen in over 5 years. And this is showing that things are extremely stretched and probably close to exhaustion, where buyers are willing to take a chance and sellers are saying, hey, we got to lock this profit in, this move has been stretched. So that's what we're kind of looking at in terms of the different time frames there. And then next thing we're going to be looking for is capitulation volume patterns. So I've been talking about capitulation and exhaustion a lot, and that's because that is the key component of a bottom. And this is when we start putting it on our watch list after we see this capitulation. It doesn't mean we're ready to buy yet. It just means that it is starting the process of stage one of basing. So, so the selling climax is going to be pretty significant on volume. We're going to be talking 200 to 400% of that average volume on major down days. Just big, gnarly red candles like we saw in the tariff crash. Just really, really rough stuff where there is simply no bid. Simply nobody is trying to buy today. I mean, obviously there will be some green candles, but they'll be incredibly insignificant, and you won't see many green candles higher, on like a 15-minute chart or higher on these downtrend exhaustion capitulation days. So the moves are incredibly violent, and they tend to psychologically induce doom, where people are just like, I don't see how this can stop, and that is often a sign that we are close, because everybody's just, even conviction holds are puking up their positions saying, I just can't stomach this. I don't know what's going on, and that is when you see the biggest asymmetry in valuation and in price and fair value. Let's call it that. So that asymmetry is obviously where the opportunity lies and where these bottoms can occur. So yeah, following the or the volume exhaustion, we're looking for declining volume on any continued selling, and then we're looking for evidence of accumulation. So this is going to look like higher volume on small up days versus down days. So we're going to start to see in this bottoming formation where the sellers have slowed down. We're not just puking anymore. We're starting to kind of have mixed tape and trading sideways. And in that mixed tape, the green days have higher volume than the red days, showing that more buyers are participating in this range. The price, the point of control is going to be in the top half of this range. The magnet is going to be the top, and eventually it will likely break out of the top half of this bottoming range and push higher. So that's kind of what we're looking for there. Conrad asking where the rest of my head is. Yeah, sorry. I need to fix my template so I always have the same spot for my my floating face there. Let's see. You guys are funny. These are some good comments here. So let me catch up on comments here. Bardar, I am talking about everything. Primarily, I'm talking about indices and sectors, but this does apply to individual names as well. If you refer back, I will record this, and you can always look back. But we talked earlier about the differences between individual names and sectors. The gist is that for individual names, all the same rules apply, but you're going to be looking for more intense, higher magnitudes of pullbacks, and then obviously higher magnitudes of potential gains as well. So yeah, but this applies to everything here. Stocks in general, as Nick says there. Oh, welcome, Mr. Zuby. I was actually listening to a Nigerian DJ earlier. What was her name? It'll come to me. Super good though. Okay, let's get back into it here. Oh yeah, Money Bro mentioning the Hull moving average. This is a fun one that a lot of people don't know about. I used to really be a fan of this. I stopped using it, but now maybe I'll give it another try. It's been a while. I forget the exact difference, but I know it's more responsive. Yeah, it seems faster on the 10-minute convergence. He's saying, yeah, absolutely. So yeah, the Hull is more responsive. I forget the exact calculation, but it's something to. I'm sorry, my second monitor just crashed. Let me reboot that. Definitely something to watch for there. One moment, guys. Thank you for your patience. Got to restart the whole presentation. Sorry about that. 30 seconds here. Almost there. Sorry about this, guys. Digital second monitor. The laptop disconnected on me. So now, if I restart this, it should work. Apologies. Okay, we're getting there. All right. Are we back? We are so back. I just need to get my face up in there. There I am. All right, we're back, guys. Let's navigate to where we were and we will be good to go. I believe we were talking about technical frameworks. We went over capitulation in volume patterns. And now we were going to be talking about that a little bit more here. So the volume signature of major bottoms here. Yeah, sorry, catching up on comments here. Talk. Yeah, it's a little bit trippy, isn't it? Okay, back to volume signature of major bottoms. Okay, week 1 or 2, we're going to be looking for these massive volume spikes in selling. So basically panic. We're going to be looking for that to start to shift in weeks 3 to 6. We want to see the high volume continuing, but price decline slowing down. So that indicates absorption of price action. We want to see these buyers basically start to overpower these sellers, or at least retain or reclaim control, I should say, before they start to overpower them eventually. So in week 7 plus, we're going to be looking for volume decreases, but that's stabilization. So that's the exhaustion aspect. And then we're going to be starting the recovery phase where volume expands on rallies and contracts on pullbacks, indicating that buyers are more engaged in this rally and it is less of a short covering type situation and more of an organic long initiation situation. So in terms of price structure and support analysis, what we're going to be looking for here is previous major lows, often from as long ago as a decade, either holding or getting swept and reclaimed. These are going to be very high term liquidity targets where, if possible, market makers would love to push prices down under these levels and essentially get all of the stops cleared out under there. So say you have a wick down and then a major rally that lasts 10 years in a stock. If you got involved in that rally at any point, early on, you would put your stop under that wick and you would say, hey, all right, now it's working. I'm up a lot. I've probably taken profit, but on any of my remainder, it has to lose this major low for me to get out. So there's going to be a ton of orders on the tape under these major levels. And those major orders attract major um, uh, involvement at those levels. So there's going to be a lot of incentive to push prices down there. Buyers are going to see that and say, hey, look, that's an area I can get long. So there's going to be kind of a self-fulfilling prophecy there. Um, that is a really important one. The next thing is that there's often going to be a pullback from the range, from the major low. You have the major rally to the high, and then it starts pulling back. That bottom is going to usually occur somewhere between the 62 and the 78.6 fibs. I love when it goes under the 78.6 fib because that is the stop run fib. That is the stop run fib, which means that if you're a bull and you're holding through this drawdown, once you lose the 78 fib, you are in doom mode, and that is usually where you'll get stopped out. And that is where you get the deepest value for a long entry on a name that will eventually break up to the outside out of a range. So, way down in that discount area where, like I said, stops are getting run, often at those major lows. So, long term trend lines and connecting major lows are going to be really good for this as well. Trend lines I give less weight to than horizontal levels because horizontal levels are where the price memory actually lies, whereas there's a lot more subjectivity in trading a downtrend or an uptrending line, a diagonal line. With a horizontal level, I don't care if you go back 100 years. If there is significant volume there, price will probably revisit it. And if price is pushing away from it, that is a sign of strength, you know. So the last thing is just round numbers and psychological levels. People underestimate this because I think it's like even like super novice traders, like it's not that easy, right? I don't just buy at 90 and sell at 100, right? You know, often it is that easy. And often the market is much more first order thinking than most intelligent traders would like to admit. Everybody wants to think like, oh, well, I have an edge because I'm so smart. I'm like, everybody thinks it'll do this, but the real implications will be this. It doesn't really matter. Everybody thinks that it'll do this. So that's probably what the initial move is going to be. And that's, you know, we're here to make money, not be right. So, yeah, it's just silly. Like, you know, oh, MicroStrategy's breaking out. I guess I'm going to put a sell order at 420.69. And oh, look at that. That's where it stopped. It topped. Oh, Tesla, same thing. You know, like it's like these things shouldn't work, but they do. So don't fight it. Use it to your advantage. There's a test and hold pattern that I like to look for. And that looks like initial test of a major support with high volume. And then you want to see subsequent retests, but on lower volume. And you want to see essentially volume drying up on these retests, which shows that at this level, there are fewer and fewer sellers willing to part with their shares here. And what this also indicates is that shares are being traded from short-term momentum sellers to long-term investor bulls. So the cohort, the characteristics of the market participants are shifting from these short-term traders who are pushing price down and they're getting out and their shares are getting transferred to people who are saying, I think this is going to double. Those are the guys who hold. Those are the guys who will start bidding each other up as that volume dries up. In that, then, you know, that's how an auction works. I want this stock at $50, you know? If there are fewer and fewer people willing to sell at 50, eventually there will be nobody willing. And then I'll say, well, okay, fine, I'll buy it at $51. And then everybody else will say the same thing and they'll go, well, I'll buy it at 52. Well, I'll buy it at 55. And that's how you get a bid up. You know, that's how you get an organic, healthy accumulation breaking out into an expansion. What else? What else? So then prices will begin making higher lows while still near support after those retests of the major level. And then eventually you'll get a break above short-term resistance, and that'll kind of confirm that turn. So first, we're kind of confirming the bottom. We're looking for the sellers to chill, to get exhausted, to go home. Then we're looking for buyers to start getting involved. Then we're looking for buyers to start running out of things to buy at this key, crucial, major support level. That is when we start looking for the break above short-term resistance, and that'll be when you get the real big power-up move there. Whoops. There we go. All right, let's talk about relative strength analysis. How can we analyze relative strength? So for individual stocks, we're going to be looking for performance versus sector peers. So we're going to be looking at, for example, Google versus QQQ. So Google is a part of QQQ. Google has been outperforming QQQ. How do we know that? We can do a ratio chart. So if you have a mid-tier subscription to TradingView, and if you have Thinkorswim, which is free for anybody with an account. I know that you have access to ratio charts. I'm not sure if there's anything that has them completely for free, but Thinkorswim is a great investment to just drop a couple $100 in a Schwab account to get access to their trading software. But regardless, if you can get access to ratio charts, that will really help you out, because then you can do Goog over QQQ, and it will give you the chart of how Google is performing compared to QQQ. So this is super helpful, right? Because we're looking for that relative outperformance for when stocks are bottoming, and we're looking to get involved in the sector. We want to get involved in the winner. So how do we do that? We are going to be doing like these ratio charts, like I said. We can look at the performance versus the broad market. We can look for like I said, those ratio charts are my favorite tool. And then for sectors, we can do the same thing. So then we'll compare the sector to the performance of SPY overall, the broader market. And so this can be really helpful. So I have every month I will go through my watch list, and it's a list of all of the ratio charts for all the sectors. So and also a few other ones, like for example, I will have IWM over SPY, IWM over QQQ. I will do like Dow Jones over SPY. I'll basically do a ton of combinations, because it's interesting what you can glean from them. If on any one of these charts you're seeing a significant breakout, then it can help you kind of pin or follow the breadcrumbs to why that's occurring and how you can profit from that theme going forward as it starts to emerge there. So rotation indicators showing when institutional money stops fleeing are going to be essentially when you do see this outperformance on these ratio charts there. Sorry, I lost my train of thought there a little bit. There's something else I was going to say. I'm sure it'll come back to me. Bear with me there. I say this every week, but it's been a long week, guys. people underestimate how tiring it is just trading basically full time. So that's why we are going to get refreshed on this weekend and go over some great charts. Keep an eye out on my Twitter. I have a lot of charts that I want to go over. But yeah, I'm really looking forward to next week. That being said, this week, we're still talking about momentum divergence patterns here. So essentially, you're going to be looking for this classic kind of divergence pattern in these bottoming formations. This is going to look like price making a new low, but oscillators like RSI primarily, but also MACD or the stochastic, they're going to make a higher low. So essentially, under the hood, things are saying that, yeah, price did make a new low, but there's some reason that people are, it's showing that people are actually potentially bucking the trend of price, and we're starting to see accumulation under the hood. So this works best on the higher time frames, like a weekly or monthly, because you really do just need the bigger context for this to matter. And the price must be confirmed with volume and price action. So we need that confluence, like always. Not just volume, not just price action. We need both. That is going to be what it looks like in a classic sense. There are going to be other, kind of variations, but this is a good template just to start with. So one of these other ones that you can look for is hidden bullish divergence. And this is going to look a little different. So price makes a higher low in these, and the oscillator actually makes a new lower low, but it's often going to occur in the base building process. And this could actually still be the sign of a bottom. So it's rarer, which is why I think that the classic is the one to kind of stick with. But, there are alternative kind of ways that this can happen, because you just got to remember that the market is a complex machine. It is a giant battleground between tons of different algorithms trading tons of different strategies. And it's just going to be a little bit hard to predict with too much accuracy, but there's going to be kind of general trends. Sorry, one sec here. Oh, Austin mentioning app. Did app get the inclusion into S&P? Hope so. My friend's in that. Both up 8%. Hood and AppLovin. Oh, Hood got the nod too. Good for them. That is interesting. Yeah, Hood surprises me because there were multiple, weren't there multiple, I thought there were multiple like FinTwit, like Coin just got the nod. Yeah, so I'm surprised that Hood did so recently. But hey, that shows shows where the market's at, I guess. Yeah, Hood, very good management strategies. It seems to be the case. Yeah, awesome. Hey, Adrian, awesome. Yeah, I'm a massive Hood bull. I sold early and I didn't get involved before this, so I must might miss this next leg. But yeah, it's a just a monster, just a monster. Okay, sorry. Getting back to the webinar, we're in the home stretch here, guys. Let's see. So a major bottom is likely to occur when you have a few kind of things in general. And I kind of made a checklist here for you guys, a little cheat sheet. Feel free to take a screenshot of this. Let me get Adrian's comment out of the way, although I do appreciate it. Um, Hey, Danny Dollars, good to see you. Yes, I can, but let's do that at the end here after I switch off. Before that, let's talk about this checklist here. So this is the cheat sheet. Feel free to take a screenshot here. Um, we'll talk about it in just a sec. So what are we looking for? What do we need to see? We need to see 5 of these 7 components. Okay, this is how you know that I was too tired when I made this. There are 6 bullet points here. Okay, 5 of these 6 components. So multi-time frame momentum should be oversold. So we need to see it on the daily, but we also need to see it on the weekly and the monthly. That's going to be the biggest thing. Volume patterns showing exhaustion is going to be super key, and that's going to be followed by accumulation. We want to see price holding at major support levels on multiple tests, not just one, multiples. So many people, they have the right idea, but they forget that things just aren't super clean when there's all these algorithms battling it out. It won't be as simple as first tap of this level, first tap of this level, we'll flip it. You know, it's going to take time. It's going to need digestion. It's going to need to find price acceptance above a level to break into the next zone. It's going to need to find price rejection, you know, at a resistance, and it might take a while. It might go over a few times and fake people out into thinking that it's a major breakout. But like I said, multiple times it needs to show and prove it. So the last couple things here are going to be relative strength starting to improve. You'll see that on the lower time frames before the higher time frames, and that's a good sign, a good thing to look for. We are looking for the lower time frames to flip because they need to flip before the higher time frames will. If we can identify it, or the earlier we can identify it, the better entry we can catch. So reversal candlestick patterns with volume confirmation are going to usually be our first sign to either start a position or at the very least keep it on a focus list to be ready to. And then we're looking for that bullish divergence on weekly or monthly momentum indicators to kind of confirm this as well. So that pulling out of that long-term oversold condition, because that can be scary because things can stay oversold forever. You know, if a stock's going bankrupt and everybody knows it, it will probably just stay oversold until it dies, you know? So just because something's oversold, it doesn't mean you can buy it. So, yeah, Talk mentioning reversals are his favorite setup. Me too. I am a dirty bottom feeder. I love just catching amazing discounts in long-term moves and just having institutions be the wind beneath my wings, you know, the wind to my sails. And these are my slam dunks. These are my best trades. JMIIA is probably the most recent example of a really clean bottom tick. We'll get into charts real quick here, but I just want to wrap up. We've got one more section here, 2 more sections to go. How are we doing on time? We're running a little long, so I'm gonna speed up just a little bit here. I trust you guys. You guys are smart. You guys can keep up. And if not, you know where to find the recordings of this and all of my webinars. Just go right on over to Trade the Pool's YouTube channel. You can go to playlists, and there's a playlist of all of the ones I've done right in one place, and you can find everything you're looking for. Oh, thank you, Joe. I appreciate that. Thanks as always for the help behind the scenes. You are my rock, along with Tim. Okay, so let's get into the 4-stage technical process here. Well, really quick, just because talk, this is like a Hall of Fame quote. Like, trading should be kind of boring, you know? If you're stressed out every day, like, sure, it's stressful by nature, but it shouldn't be inherently super stressful. You should be on the right side of a trade. And if you are getting stressed, if you are getting cooked, you probably did something wrong, to be completely honest, you know, like on a regular basis. All right, guys, let's get into it here. Let's get back into it here. So, For this four-stage technical process, this is what we're looking for. Stage one is screening for candidates. So we're looking for assets that are showing a 40+% decline from recent highs for individual stocks, or a 25% decline for indices or sectors. We're looking for daily RSI to be below 25 for multiple days, and we're looking for the trading or for trading to occur near significant long-term support levels here. Stage two, it's going to be that multi-time frame analysis that I just keep on harping on. I love it. You need it. It's a requirement for trading on these, higher time frames for any kind of anything more than a day trade. And even then, I think it's a requirement. So for each candidate, analyze the daily charts. You're going to be looking for price action, volume, and short-term momentum. For weekly charts, that is going to be your intermediate trend, and you're going to be especially looking for the medium-term oscillators to start leveling out and curling up. The monthly charts are going to be your long-term context. Everything you do should be framed in the context of a monthly chart, if not a quarterly chart. I love quarterly charts. I love yearly charts. Give me decade candles, and I'd probably trade those too if I lived long enough. So they're all the same. They all work the same. It's great to know that confluence, or the fractal nature of price action. If you have a strategy on a 5-minute chart, it'll probably play out on a daily chart too. To a similar degree. So that's what you're looking for there. Step 3 is going to be volume and sentiment integration. So we're going to be combining volume and sentiment with our high time frame, multi-time frame analysis. We want to see volume analysis showing these exhaustion patterns that we mentioned. If you're not familiar with these, just go back a little bit. I mentioned them a few times here. I don't want to bore you guys too much with saying the same thing, but you're going to be looking for relative strength versus appropriate benchmarks, like we said. So you can compare to the relevant ETF or sector. You can compare to the market as a whole. You can compare to a competing name. So all going to be valid. See what looks good. You can pull these charts up and you can see for yourself, and probably something will stick out, and probably that's something worth noting, and that's something telling you something. Some of my best trades this year were using these divergences to catch. I caught the entirety of the semiconductor puke. That was how I played the tariffs, and I was using all of these to kind of do the opposite. See a major top, not cyclical top, but at least a major top playing out, and these divergences in particular, and seeing the weakness starting to materialize on semiconductors. The flip side of this is because I was so focused on short, I didn't get long nearly early enough in them. So I missed. I probably would have made more money just only focusing on catching the dip and not even looking for further continuation. But regardless, that is a really good early indicator, leading indicator for these kind of things. So you're also going to look at options activity. This can be a really good actual leading indicator. There are very few actual leading indicators, and I don't even know if you could consider this actual one, but I mean, it occurs because someone knows something quite often and they put their money where their mouth is, and this often will create a what's the opposite of a vicious cycle? A positive cycle, a self-fulfilling prophecy. There you go. Where people will see it on the tape. There will be potential large options purchases. Maybe there can be a lot of things going on, but the gist is that just keep an eye on a few things, specifically put call ratio and large dark pool prints, or large share purchases, as well as large flow on decently out of the money options. So I look for 0.3 to 0.4 delta. I find that's kind of the sweet spot, and that's usually what institutions tend to target. Here's some really good free alpha for you guys. Any day traders out there who trade weekly or 2-week expiry options, if you're trying to play momentum and you're expecting the price to expand, you're going to want to buy a 0.3 to 0.4 delta contract. 0.3 to 0.35 is what I go for. And then when that goes in the money, you buy the next one up. It will be a really significant gain, and you can roll up with profits. And, usually I'll wait for the strike to hit. I'll sell into that. I'll wait for just a little dip under it. And when it finds any kind of buyers under my strike that I just sold, I will buy the next strike up. It will be roughly 0.3 to 0.35 delta. And that is what you look for. You look for institutions to do the same thing. And you should see that thing occurring, where you'll see them sell the strike as it goes in the money, and then you're going to be looking at the next strike up for big buys on that one, and you can ride that wave. So that's a tangent, but that is a huge part of my trading system when I'm trading short term to generate income for actual investments. So thought I'd throw it out there. So what else do we got here? I'm still on stage 3. That's where my head's at. Okay, so confirm the previous high time frame analysis with volume analysis and options activity and insider buying. Stage 4 is going to be building a position and how you do that. So start with 25% of your intended position on these long-term plays. You never want to just go all in. It's just, if you're wrong, it feels terrible, just terrible. Not, I'm not talking like all in your port. Never do that, but all in on the amount of the allocation you'd like to put to the position. It just feels really bad when you're a little bit early and you buy in and you're immediately down and you're just like, oh, okay, I guess I got this ball and chain until it finally decides to do the right thing, which I thought was now, and now I don't know how long it'll be. So much nicer to buy a starter and then it dips and say, okay, now I'm getting close to my next buy. And then, it just needs to go up a little bit for me to be in the green. And if it does what I expect, then I'll just be just rolling in the profits, right? So you should be sizing so that dips back into the base without failure of a major level are good things that you're looking to slurp up those dip buys just like the institutions are. And as long as they keep buying, you should too. You can only do that if you allocate your money in tranches and not put it all in at once. So you can buy as price goes down, as long as you have some reason to think that now price is stabilizing at that level. What I like doing more, and this is the bread and butter of the strategy, is actually pyramiding in and adding in if additional confirmation appears. Because we're buying really long-term positions here with a lot of room up. So what we want to do is we want to have more capital into trades that are going to be more successful, right? We want to allocate money to winners. If a stock has a lot of potential to the upside and it's just starting to confirm, we want to add to that position. We aren't trimming that. And on the other side, since it is a long-term position that you're accumulating, this is one situation where I do think it is acceptable to average down, and as long as there is logic to it. Don't just blindly average down. I know some people who just say, okay, I'm down 10%, time to buy more. I'm down 20%, time to buy more. You know what I hear them say a month or two later? I'm down 50%, time to buy more. It's not the way to do it. Make sure that there's a reason why you think this is a dip to buy, because otherwise it could be 7 dips and a year later, and speak in my language. This is why we get along so well. This is one of my favorite books of all time. It's actually not even like specific to trading. I think it's like a poker book, but Annie Duke's Thinking in Bets is an amazing read. It will change how you view this stuff. You should be looking at all trades in terms of risk to reward. It's like this book will make you start thinking about the market and your bankroll in terms of big blinds, like how many plays do I have in here? How many opportunities, how many looks do I have? And that's what it's really about. The percentage of each individual trade and how many trades you can get to have your edge play out over time, and weather the variance. You make new traders buy and hold one stock. That's devious. I'd love to hear about your specific reasoning. That's interesting. That's very interesting. Huh? Always good to hear what you've got going on when you're torturing your interns. Okay. So start with 25% of that intended position. Like I said, you can add more if additional confirmation appears. You can add more if it goes down, but only if there's a real good reason. This is a dangerous game. Make sure you understand that you are playing with fire if you are ever averaging down on anything that isn't a 10-year long conviction hold. That's all I will say. It sucks to just be in a position that you believe in, that the market says, nah, you're wrong. And you just keep having to watch, as you allocate more and it just eats your money. And you're like, I know it's going to happen eventually, but why didn't I just practice risk management on the first entry and wait for this, to actually start a position? So that kind of thing. Okay, one share, one stock. That's different. As you were saying, full port and sweat and feel the pain. Learn through suffering. Okay, so complete the position when basically the majority of those checklist factors are coming together. You're getting that confluence. Everything's working. That's when you should have your full position and set your mental stop loss below a major support level. I say mental if you're disciplined. If you're not disciplined, then don't do a mental. But for a long-term position, often a daily chart, they will run a daily level And often they will even close it at the low of the day only to finish the week with a, strong close. The weekly candle is just a down wick into support. It breached support. It stopped you out. Didn't stop me out because I had a mental stop. I wanted to see where the close would be on the week. But just know that you are risking more because you can get, I mean, it's not slippage, but essentially stocks you can say, okay, well, I'm waiting for the hourly close, and it can dump another 3% before you go, okay, you got me. Now I'm sure, right? So just things to keep in mind in there. This is a long-term trading strategy, investing strategy, really. So with that being said, you can play a little bit more fast and loose with stops. I think it's so much better to start really small positions in these long term bottom feeding things and add in as they start working. Um, and then if it gets hammered, then you can say, well, I'm not going to sell because it was just a fake basing and it needs to rebase. But I'm not going to sell for down 30% or whatever. I'm pretty sure it will recover someday, but that's why the position sizing needs to be small enough that I can do that and just have it sit in my Roth and not have it worry me every time I look at it, that kind of thing. So moving on from the 4 steps here, customizing for different asset classes is, we should probably mention that real quick. So for individual stocks, you're going to be focusing more on company specific support levels. So, just name specific support levels. You care less about the ETF, because if this is stock is a major component in that ETF, its price action, its breaking of trend can lead that to follow in the ETFs. That's the chain of command there. The leader moves and then the ETF buys that and it pulls the ETF up and yada yada. What else? You monitor insider transactions and any earnings revision trends as well. Just basically, you're keeping an eye on the fundamentals, and you're seeing how insiders respond to fundamentals and changes in those fundamentals. Pay attention to sector rotation and the implications of those sector rotations. So, for example, if you see defensives all coiling, ready to break out, and you see tech at the top of the range, that might be a sign that you're seeing rotation out of tech and into stuff like healthcare or whatever. And think about the implications there. Well, if that's clearly risk off, right? That's the most obvious risk off in the world. Oh, Philip Morris is surging, and whatever the heck, Oklo, ASTS, momentum BS we're trading is dying. That's a sign that risk is going off pretty clearly. But it can be a lot more nuanced than that. When we see outperformance in home builders, for example, compared to tech, I feel like that might be a sign of more broad-based, actual fundamental bullishness on the economy, or dovishness, in terms of policy, because momentum plays could be a bluff. But if people are buying home builders, that doesn't seem like we're headed for an economic recession. So see how we're trying to kind of parse a narrative out of these relative strengths and weaknesses. And this works comparing sectors like we just did there, or in individual names too. We were very early in Google, and we were early in it partially because we recognized the relative weakness, and we knew this is a stock that's going to go higher. The high time frame structure is good, but it's just not ready yet. While the other ones, they're getting their shine. So that was a sign for me to to get very involved in Google, and now it's starting to finally this is how it works, right? We catch that bottoming process in sentiment, and then technicals start to fade, and then sentiment starts to shift, and that's going to power the move up. And now it's just working and it's outperforming. So we remain long Google. What else? Like I said, consider individual options flow data as well. I trade a lot based on flow. That's why I'm in HNGE right now, getting my butt kicked down about 20%, but whatever. A lot of these, that's the other thing with flow. You kind of have to have faith, and that's why you only allocate the money you're willing to lose, because if this contract goes up in smoke, hey, big bulls were wrong. But if they're right, then it's an easy 2-3 bagger, and all I had to do was say, hey, chart looks good, and somebody else smarter than me bought a lot of, put their money where their mouth is. So for sector ETFs, it's a little less contingent on flow, just because it would take so much more flow to have an impact. But that being said, it's still incredibly flow based. I'm always looking at call put ratios. I'm always looking at gamma exposure, delta exposure, these kinds of things that can indicate where price is going to lead. Although that is mostly short term. In terms of long term, like this, we're going to be essentially monitoring the leaders of the sector. We're going to be looking for the sectors overall, and like I said, trying to kind of derive a narrative from the action of the relative strength of these sectors, and then we're going to consider where we are in the economic cycle. So that is key, and I want to talk about that in just a second. I think it's on the next slide. So we're going to actually come back to the mistakes too. Well, this shouldn't be in here at all. We already went over this. Okay. All right, we're jumping around a little just because this makes more sense to me as I'm presenting right now. So we were talking about where we are in the cyclical sector rotations. So early cycle sectors that do well in early cycle bottoms are going to be financials, technology, and consumer discretionary. So these are going to be things that, for example, benefit from rate cuts. You know, financials obviously do very well from rate cuts. Technology does as well. Money is cheaper. Small caps and stuff as well. But and consumer discretionary, basically, you know, people have more money. Money's cheaper. They go buy more stuff. Mid-cycle bottoms are going to be stuff like industrials, material, and energy. And then once you get in the later cycle stuff like utilities and consumer staples and REITs, these are going to be definitely more risk off. So basically, understanding where you are in the cycle will help you kind of look in the right direction for which sectors should see money rotating into them and which sectors should see money rotating out. And remember, it's all just one big dance. It's all big one merry-go-round where money is sloshing from one bucket to another. Money very rarely leaves the market. Just very rarely does money significantly leave the market. Money is constantly coming into the market, and it just gets moved around. When major institutional entities hold 80+% of common shares, they by and large dictate price action based on their institutional movement. And so we just gotta, they can't sell, they can't just sell, they gotta sell something to buy something or buy something to sell something. So that's what we're looking for here when we're talking sectoral rotation. That's how you catch these amazing trends. The one I'm probably best known for is just the China bottom last year, which was just this. It felt scary at the time. People were saying I was crazy, but to me, it was very simple, because we did all of the work that we talked about in this podcast or this webinar, and it just ticked all the boxes. It made sense. Everybody hated it, and I didn't get it. I didn't get the fundamental or why there was such a divergence outside of positioning and all these things. So I got it, but I just wasn't scared, I guess. So these types of things. Shout out Exotic Seal, my buddy. If you're in the chat, you're probably not, but he perfectly timed. Just about perfectly timed the bottom in solar in FSLR. Everybody was panicking. And he's saying, hey, I think the narratives are overblown. And I think that when price rips bears faces off in 2 months, those narratives will start to be challenged, and then we'll see that actual bottoming happen. And so, yeah, these are some of my favorite types of setups. I am looking at a lot of biotech right now. I'll tell you that much. Unfortunately, I was really looking at BEAM. I missed the major breakout. I probably should have just bit the bullet and bought it yesterday. I'm hoping to get a little bit of a dip, but taking a look at other names in that basket as well. I'm forgetting on the ticker. I'll bring up some charts for you guys in a little bit here. But yeah, understanding where you are in the cycle helps prioritize which sectors to focus on, and it keeps you where you need to be and aligned with smart money interests. So, where were we? Okay, I wanted to bounce back to the common mistakes really quickly here. So, just don't buy too early. Like I said, acting on just 2 or 3 technical signals instead of waiting for the confluence will get you burned, especially in these long-term buys, because you could get stuck in the doom loop, stuck in the whole, trade sideways for 5 years type beat. Nobody likes that. If you wait for these setups have so much room off the bottom, you just have to wait for the actual move. Like China, it gave you so much time to accumulate and so many fake breakouts, but you just have to have conviction, and The longer you wait to buy to start a position, the less a mental capital you will burn waiting for the actual move to happen. Because obviously we're going to be early, because if we're not early, we're not catching the move. So you got to be able to mentally weather the fact that these things will chop. And that's part of these setups. So that means that you don't have to be early, or you don't have to be like super early, right? You can let it develop, and it'll give you the look. It'll give you the look. You just have to be willing to either take a little bit of drawdown, or to ideally just just be patient here, essentially, and wait for the all of the confluential factors to line up here. So over positioning is a really common mistake, going all in because the setup looks perfect. Yeah, well, guess what? Next week it might not look perfect anymore, and you are stuck. And then because of that, you're going to puke your position, even though it's probably just normal price fluctuation. You think, oh, my thesis is wrong. It's doom and gloom. I will blow up my account if I don't pull the plug right now. So then you sell the low, I buy that, and then we're off to the races without you. That kind of thing. So make sure that doesn't happen to you with your position sizing there. Ignoring timeframes, that'll kill you as well. So if you only focus on daily charts and you miss that weekly or monthly context that actually matters, you will do the same thing. You will sell into weekly support, and the weekly bulls will say, well, thank you, sir. I'll take this. Perfect. I'm in. Let's go. They get the stress-free trade. You got cooked. So that's why context matters. Fighting volume, again, never a good idea. Buying when institutional volume is still on the sell side is how you get trapped in these never-ending death loops of, oh my gosh, the amount of times I've gotten skinned buying stuff like XBI too early, or Square, XYZ, PayPal, all these charts that's like, oh my gosh, Marvell, all these charts that if it breaks to the upside, it's a double. Yeah, well, you know what? It's sure took its, or they take their sweet time. Shopify is another example. I got stopped out of that 3 times, and I missed the actual triple or whatever from the base that I was stalking for years. Carvana, I made a very small gain, even though I said load the boat at 60, it's gonna double. It took so many times to actually confirm over 60 that I stopped watching it and I missed it. So one of those things that you just got to have conviction, and you got to wait till the institutional buying is on your side. And when it is, you will get just insane explosive moves, and they will be so easy because you'll be expecting them, and you'll have high time frame targets, and you'll just let it do its thing, and it'll just drift up with you. And it's a beautiful thing. That's what you want to do there. So let's see, talk saying, so if you can build up from one share to a full lot, the muscle memory should kick in as opposed to blowing up your account in a few trades. I like that. That makes sense. Okay. I'm with you. All right. So there are common mistakes there. Let's get on into continuing on with intermarket analysis, and then we'll wrap up here in about 5-10 minutes and get to a few questions. I can show a few charts, and then we can start enjoying our weekends here, guys. I really appreciate you guys. It means a lot that 90 people want to spend their Friday afternoon or evening learning about stocks after a full week of it. So you guys are the best. I really appreciate y'all. Feel free to come join our Trade the Pool Discord server. We have great people and great traders in there. There's live rooms trading almost every day. Just about every day, I think. Yeah, every day. So great to go there. Also, feel free to check me out on Twitter at Steve Tileman. You'll find me. You'll find my Discord as well there. That's where I'm always live trading. And awesome. Thank you, Joe, for dropping the links there. Yeah, thank you so much, guys. I also do have a paid service. I do a newsletter and trade signals for 20 a month. Don't feel obligated. My first and foremost goal is education, which is why I do these, which is why I have the Discord server. So come on in. Great traders giving away completely free alpha, and they want to teach people. So come on in and learn with us. But back to this. Let's wrap this up strong here. Intermarket analysis. So key relationships we're looking for here are things like bond yields to growth stocks. So for example, I'm watching high yield bonds very closely, and that has been a big reason why I've been so darn bullish the past couple of weeks, because HYG and JNK, essentially high yield bonds, they are breaking out. Why is this happening? I think now we're seeing it's because of the potential of a 50 basis point cut. The caveat being that if we don't actually get a 50 basis point cut, I wonder if we sell the news a little bit, because just small caps love selling. That being said, if they don't, then we are seeing a major cyclical change in these small cap sectors. If we see that, that's how you get the next big leg of the market. So that is what I'm looking for and expecting, but I'm just keeping an open mind to, hey, maybe it's not different than every other time, and small caps just get sold massively. That being said, mega caps look amazing. High yield bonds look amazing. Rate sensitive trades look amazing. So it's hard to be bearish. It's hard to be bearish, and this is coming from the guy who thought Trump was literally torching our economy. You know, so that allowed me to get the short, but it also prevented me from buying the dip as aggressively as I should. I'm just about full allocation now, but for a long time, on the way up, I wasn't. Where was I going with this? Now I'm just rambling, probably. Um, in terms of where I think the market is going overall, it's really hard to be bearish. We are seeing here. I think is the gist of it, the crux of it. The tariffs are unconstitutional as long as the market is assuming the historical precedent of a sane and rational Supreme Court. They should get batted down. The market should recover. It is priced in a lot of fear. There are a lot of reasons why the market could go up, and rubber band out of that. I worry about the tail risk of the Supreme Court not upholding the historical, what's the word I'm looking for? Like case law basis, whatever, of relative sanity in terms of overreach regarding executive orders, essentially, and tariff stuff like that. So I see the tail risk of this bull market being a constitutional crisis, and I see that being just about the only thing that can take us off the rails of this train for now, until something pops. So that wasn't on the slides. Sorry, I brain fried. But there's my thoughts on the market there. Precedent, thank you, thank you, precedent. I was going crazy there. Also, just since this is a little free form now, and you guys seem to not be hating it, I will keep talking to y'all because I love these two names, Metzi and Oscar. Adrian, I don't know if you're in my Discord, but we've been talking about Oscar. I've been in some calls that are up 100%, and I'm holding. I think they're going a lot higher. So we're getting the surge up for the gap fill. Heck, you guys want to talk some charts? We can switch over to charts. All right, we're going to put a pin in the stocks just for 1 sec. We're going to power through this in 5 minutes because I want to get to some charts. I want to talk about Metzi and Oscar and what I think is going on here. Saying read up on Smoot-Hawley tariffs. So, like me and every other Smoot-Hawley tariff expert, I learned about them when the tariff crisis was happening. So, sorry, I lost my train of thought there. I would be shocked if the market was dumb enough to repeat such a massive mistake as the Smoot-Hawley tariffs. And therefore, I think that what's happening and why the market has recovered the tariff dips is because they're calling BS and they're saying that this will go to Supreme Court and it will get shot down. This is speculation, and I'm not a political pundit or expert by any means, but I do have a sick fascination in it. So we'll see. I'm calling my shot there. Let's see. Michael Anthony, where are the charts? Give me the charts. Give the people what they want. That's fair. We're going to get to charts real quick here. We're going to power through. So on to current opportunities, we're looking for names that are making new 52-week lows with improving relative strengths. We're looking for sectors that have been in multi-month consolidations near support. International markets showing extreme technical readings as well. And we're also looking for high-quality companies caught in sector-wide sell-offs. So here's the conclusion. Patience pays. Major bottoms, they'll take time to develop and they'll take time to confirm. So you got to stay in the pocket, you got to hold, and you got to have conviction. Confluence is king. So single indicators can lie to you, but multiple indicators align, they're going to reveal the truth. We need volume to validate. So price movements without volume confirmation are often going to fail. That's why we need that confluence. Big price needs big volume. Otherwise, it's not real. Time frames matter. Whatever, what looks like a bottom on a daily chart, it could be just complete noise on a weekly or monthly. You could think you're buying a high conviction bottom. You could be stuck in chop for a long time, or worse. So those are the takeaways. In terms of your implementation of this, if you want to start working this into your system and looking for this, start slow. Start screening for technicals that we mentioned. So choose your preferred platform, create templates for essentially what we talked about, that 40 to 60% drawdown. And what you're going to be doing is creating a watch list of potential candidates of bottoming sectors and stocks. So this will give you a bullpen to keep an eye on. You should review this weekly or monthly. So, and after a couple weeks of this, you will have a little bit more of a understanding under your belt of what you're looking for. So then I want you to go back and I want you to analyze some historical examples of bottoms and then kind of project those onto your watch list and see if you can see similarities, see if you can see differences. Just note what you see. Paper trade your signals and start building confidence. If you see that it's bottoming in your watch list, take the trade in the paper account. See if it works out. Start building the muscle memory, as Talk said, muscle memory of doing the right things and having it work. So after that, just refine your personal indicator combinations. I was almost going to say remove indicators from your screen. I think that's really what this, like, read between the lines, and that's what I'm saying here. Probably you have too many indicators on your screen. I know this is coming from the TA guy who always gives you new indicator webinars. You don't need them all. Find what works best for you. Rock with that. Add some, see if it adds something. If not, take them off. That's what I do. I have like a pool of like 5 or 6 I use, and then I'll experiment. And very often I just say, that's cool. I don't need it. I'll put it on the list and I'll check it every once in a while for certain situations. But yeah, after a month ongoing, you just want to get into the systemic application of this. So you're screening you're screening for plays weekly. You're adding to that rotation. You are maintaining and curating your rotation watch list. So you're taking names off if they start to fail or if you have reason to doubt them. You are maintaining it, right? And quarterly review of your performance. So you just want to keep tabs on if what you're doing is working, because we want to spend time doing what's worth our time, obviously. So on a yearly basis, probably refine the criteria just based on results. We just always want to look at the data, just like when we analyze a stock chart, we analyze our personal trading data and we refine from there. So next week, that screenshot's wrong. Okay. Next week, we are going to be talking about, gosh, I'm so brain fried. We're going to be talking about something that's going to be good. It's going to be a surprise, and you're going to like it. You're going to know about it in a day or two. I'll put it up on the Trade the Pool Discord server, and then you'll also see the event on the Trade the Pool YouTube stream. That is it for the actual presentation. Now let's talk Q&A and let's talk charts here. This is what you guys are here for, probably. I don't know what you're here for, but everybody loves this. So we're going to jump into it. Let me pull those up for you. Bear with me 1 second. Oh, I figured out the issue with my other monitor. It was stuck to the other side of the screen, the virtual monitor. There's the window. All right. Great. Okay, so you guys can see too. Perfect. So we have some stuff to talk about, don't we? First off, let's talk about the names that Adrian mentioned. We'll start out with Oscar, since I'm in this one. Beautiful weekly candle here. So if we put on our Bollinger Bands, you can see that it is just breaking out of the daily Keltners here. And the Bollinger Bands, if you zoom in, you can see they just flipped over and reclaimed. They're exiting the squeeze on the daily. So the squeeze means that Bollinger Bands, this level here, is going to be inside this Keltner band, the darker one. So when it's right here, it's in the squeeze. It's basically priming itself for a big move. As you can see, it seems to be indicating that it wants to go up. So now when price leaves it, it did briefly here, then it needed a back test, and now it's breaking out again. This means it should stay within this band as the band pushes up. And what we're looking for in terms of targets is a test of the weekly Bollinger Band and Keltner channel. And what we should see, if I'm right, and this is a long-term breakout, is we will see the daily Bollinger Band exiting the squeeze turn into the weekly Bollinger Band exiting a squeeze. And what that'll look like is the weekly candle next week probably is going to surge up and smash into this zone right here between the Bollinger Band and the Keltner channel. When it gets there, it's going to start pushing both of these bands up, right? But which one is it going to push up faster? It's going to push up the Bollinger Bands faster because they are more sensitive to recent price action. What this means is this lower line is going to cross up more aggressively than this line, creating a squeeze. It's going to leave the squeeze condition and start expanding because this Bollinger Band is going to break over the Keltner here. Does that make sense, guys? You following me? Hope so. So what we're looking for is low time frame to the next time frame up, right? And then if that sticks the move, that would look like sweeping these highs. And then we're going to essentially be testing the major breakout, which would look like a monthly eventual squeeze. But what it will really look like is a flattening of this monthly, because this has a long way to go before it actually squeezes up. So we have a long ways to go before we get to that point. But that being said, the weekly squeezes, these things are amazing if we can get traction. So I'm keeping a very close eye on this one. I'm in it. I got in. I mentioned it at close here, and I said, if it breaks, which it sure looks like it's going to, breaks 1785, it's going to break out. I bought the 1820 back test when it found support intraday off of the breakout because I did not get in at close here. I wish I did. So I am holding this one for some ways because I think that it is has potential major tailwinds as a disruptive healthcare name over the next couple months. There we could see policy shifts, which could majorly benefit OSCR. It could take some time. I'm in shares and those calls. The calls I obviously will be selling pretty soon because they are September 19th dated. But I'm seeing healthcare in general as a potential place where money is going to start flowing into. So let's keep charts real simple here. I'm trying to get better about presenting my narratives via charts without too much clutter. So this one has a few too many lines too, but pretty basic here. We have our big point of control. See this big volume shelf? This is home base. This is the magnet until it's not. Every time it goes under it, it reverts to the mean. Every time it goes over it, it reverts to the mean until it's ready to break out. This was a breakout. This was a first back test. Came back to the 50% of this range and rejected again. There was not flow for a sustained move up yet. So it comes back to home base. It coils here for months and months and months as volume increases. Let's look at the monthly to show that volume increase. See how sharp that volume increase is? You can do this just like you can with charts. You put a downtrend line on your volume and you look for the break. That's a significant break, and it breaks on the back test. So volume is breaking out, meaning more people are getting involved than just about ever before, and they're doing it at the last high volume area, where was the first impulse move up. It is flipping resistance to support. So we are going into the most bearish 2 weeks of seasonality for the market. There is good reason for people to try to expect inflows into risk-off sectors. Doesn't mean the market has to go down. What it does mean is that everything can go up together. So when we look at the daily chart on XLV, what do we see? This blue weekly trigger, very important. This purple monthly trigger, even more important. This lighter blue is a daily trigger, and all of these are, short-term momentum triggers, which have done what? We were basing in this range. We gap up over the resistance. We are now testing the bottom of this giant shelf. It was the magnet. Now we're pushing away from it and trying to confirm that we want to push up away from it. When a magnet flips, we are going to gravitate up to the next magnet. Very clearly, this high volume node at 146, 147 area. So we are looking very closely at XLV to breach the 200-day and start looking constructively above that. After the gap up on the day, over this range, we're seeing a very tight flag here starting to form. This all looks very, very healthy. We saw the pennant break today. It broke very cleanly both the diagonal line and also the horizontal multi-day pivot. So this is a long to me. This is a long, and why I'm looking at names in this sector. Let's see. I'm just checking comments again here. Adrian talking about OSCR here. Good similar thoughts. Going to trim at 20. Yes, absolutely. So I'm trimming my options at 20, and I will allocate part of the profit since there'll be probably 200% plays to rolling up to the next, probably up and out. I'll probably go October 25 calls because if we're right, then we get that big explosive move there. I'll flip back to that real quick. OSCR, if we do get the move we're looking for, see weekly chart, it moves big when it moves. So assuming we at the very least sweep this, that's a 22% move. In a week or two, probably it would happen, I would say. So buying a month's worth of time seems smart for the extension. You could look for the flow. And what we're going to do next week on Monday is essentially we want to see where smart money thinks that the next pivot is going to be, or the next magnet is going to be. So if we see them hammering the 22s or the 23s, I think would probably be what they target to this swing high. I think the 23s probably look good. So that's what we want to look for. We want to see a lot of volume coming in on the 23s. And we want to see, yeah, just about that. I think that in the next couple of weeks we'll test this high, Adrian. That's what I would definitely look for here. I think this is a little not aggressive enough. Let me redraw this. I think expansion. Here was our weekly candle. Let me redraw. I think likely we test 20 immediately on the impulse, then pull back just a little bit. Let me go to the daily. Test 20, overshoot just a little bit up to this volume shelf, 2050, let's call it. Then we could need to come back down to this imbalance of the breakout and the hourly trigger test. 1823-ish is a potential place where we could fail. I think what we will see is buyers pretty aggressively stepping in and going for this sweep of the high. Then the stops will come in. It'll probably back test this volume shelf, then go for the last high sweep and then big expansion. So it would be pretty aggressive move, and we'd be looking for these moving averages to keep being supportive, especially this blue 9-day EMA. So that's what I'm looking for on OSCR. I'll give you one more healthcare name I'm in before we move on to other stuff. HNGE, the daily candle. I don't love it. I was hoping for a close up here, ideally above this. I don't love it. Bulls bought on this day on the downtrend line break, and it was a fake breakout. Had to come back, but support is holding really nicely and really cleanly at the bottom of this volume shelf here. So if we're right, it holds at the volume shelf, and it will follow this really clean stair-stepping channel pattern that it's been doing and surge pretty intensely. There was relatively big flow on 65 strike Octobers. And if we look at the after hours charts, the top wick is actually 64.87. And if we draw the downtrend line from there, it's an even cleaner attempted breakout. And now we're kind of digesting a potential back test or a potential rejection. So keeping an eye on this one. It's tight. Yes, so it makes logical sense that the surge high target would be that 64 that they targeted with the strike. So the weekly looks better. Still a sketchy weekly candle, but it's not a bearish weekly candle. It did push a little down. Don't love that. Couldn't push above the last week's, but it's in consolidation. And it's holding above the open, and it's holding above key support, and it held the bottom of this channel, which is what I really care about. So that's one I'm definitely watching. Now let's talk about XLV and the ratio charts. So if you do XLV over SPY, This shows something interesting. On the monthly, you'll see this very commonly. Charts, ratio charts. So basically charts tracking the flow of money from one sector to another, move in very, very predictable, ranges. And they will do very, very interesting things like find big bids and have the individual charts look like they're ready to break out and set up for breakouts when the ratio charts puke all the way down to historic lows. Basically, we're retesting the breakout of healthcare versus SPY that took place in 2000. So this is the best time to buy healthcare since 2000. Think about that. In terms of this, not saying 100% it will outperform any other time, but this is what I'm saying. It's like at a major deep discount, and it seems to be respecting this. It's like this chart is being respected by algorithms. Algorithms definitely trade ratio charts, no doubt in my mind. So let's see. Let me check on comments here. Which was the others beforehand? Yes, that was Oscar. Thanks, guys. Met C, I have a very, very small starter position off of the back test of this 2270 level. I wish I just had a ton more. It's doing the thing. This is an absolute pristine chart. It's going to smash up to 3275, probably in a straight shot, now that it has found price acceptance over this 1.27 fib. So remember how we do this, guys. We go lower range, higher range. There's our fib range. We watch the 1.27 because if it's going to reject, this is where it will. So the first impulse move last week did wick down, but found very strong support, just straight buyers from the open this week. Literally did not look back. Oh, this month. Yeah, we'll start of the month this week. Yeah. So literally straight bullish expansion month through the fib. This should very likely put in a similar size candle to this and probably bigger. It's probably going to do the 1, 2, 3 expanding candles thing. So if it's putting in a bigger candle than 33%, that would put us to the major extension smash move to $2 or to double the base to 39-ish. Not saying we definitely get it, but this is a crazy setup. And again, why are we seeing coal go crazy? What's the narrative there? I believe it is about alternative ways to fund or to power data centers. And it's also, the children yearn for the coal mines. That's what this administration keeps telling me. That's really all we want to do is get back into the mines. So, long Met C, long America. Look for 32, look for 39. Probably a shares play. All right, here's my short-term trajectory. Oh, wow, look, it's doing the thing. All right, so cool. I thought it was making a higher high here. I thought it would come up and test this. I thought it needed to retest the daily trigger down here. So I thought come back into here, then come up and retest this, but it won't be ready yet. So one more pullback. It'll make a higher low there as it pennants, and it will break up and out. And so far, this is working nicely. I love to see this. Oh, my slide isn't up in Discord yet. I'm so sorry, Discord guys. Knew I forgot something. Let me switch on over. Thank you for letting me know, Tim. Un momento. Here I am. Okie doke. So, we talked about a few names. Let's talk about a few more here. Throw me some names, guys. If there's anything you want to go over, otherwise I will look at some ratio charts and then we can kick off. Yeah, METC is better than most though, since it's double play coal plus metals. I like that. They're pivoting to a metal extraction along with the coal. I love it. So it's a rare earth metals play essentially. And that being said, it is, I do think you're right on the double whammy because coal as a whole is setting up here. So long term, if you missed METC and you don't want to chase it, even though I think it's a better chart long term, HCC, very good chart. Very, very constructive, very good. We got involved a little bit here, but these are just starters, testers, like so small that I don't even feel like I'm in them, to be honest. But it's just nice to have, a couple shares to cry about, I guess. So HCC looking very good. What's the other one? Metsy's my favorite. HCC. The shitco is BTU. That one's breaking out there too, though. A lot of room on these. Look, if we're double bottoming long term, it'll come up and test. Sorry, messy old chart here, but it'll probably test. Breaks this downtrend, should test the big downtrend, I'd say. Call it the pivot, call it the point of control. It'll surge back to 23 or so. So that's still some decent room. Just watch the 20 handle area. Probably buy any pullbacks this week or next week and expect support to be found in the inside of this weekly candle on these guys. Same with METC. Yeah, any pullbacks you buy. What else? Yeah, BTU, but all coal stocks are up. Absolutely. LEU, oh, you want to make me cry. I did not take this trade, even though, look at me, I charted it. Sure was watching it down here for this break. Sure was watching it. That'll make you regret a few things. 400% move would have been a free play. Don't you love it when it breaks your entry signal and then literally just doesn't look back for 125%? Very cool. Okay, so what is it doing now? These are parabolic movers. This one doesn't look done. So what we look for parabolic movers that don't look done is respect of the major rising triggers and moving averages. So on the daily here, it is fighting to retain the 50 on the day. Very good. Very much what you want to see on these leaders. NVIDIA is in the process of potentially rejecting its 50. Hood, stick saved, it's 50 and is now breaking out to the upside. The 50s are very important for these leading sectors, or leading names, I should say. This is an amazing chart. Thank you for bringing it up to me. I'm actually not even sad because it's setting up again and I can probably get involved here. So this is a leader in what are they? Are they like, they're uranium? Are they data center specific? Like, or I don't know, but something uranium power related. So now we have this is a high and tight flag setup now. These things are incredibly powerful. Actually, I bet it looks even better if we draw a flag like this and it'll have a fake breakdown. Perfect. Yes. So this is what I like. Nice uptrend line here too, but that's less important. So this is a textbook high and tight flag setup. A high and tight flag setup is when a stock moves parabolically over 60%. This obviously exceeds that at a 200% move. So what we look for now is crazy freaking expansion. So how would I do the fibs on this? More conservatively? Well, first off, let's see what we see from these. And I'm going to turn it on logarithmic too, because this is such a parabolic chart. That looks more normal. Okay. We did not get the 50% of the move pullback. That would have been nice. Couldn't quite get there. Sign of strength. What can you say? I bet if we turn on our other fibs here, it will respond to this. This will be the 62, maybe. Let's try that. 62 basically was swept down and reclaimed. Yeah. Okay. Yep. So that's still valid. It's very strong, holding over the fibs. In terms of expansions, I mean, potential expansions are crazy. 400. Call it a double. More reasonably, you can do the immediate range, this range, and do expansions from there. 290 to 300 seems reasonable for a test. If it can find price acceptance over 290, then 325 to 330, I'd say. Long term, this is like, oh wow, I didn't realize. Yeah, okay, so this is just like an insanely beat down stock. Let me take it off log for a sec. Wow. Yeah, so log makes these charts look so much more normal. But this is an insane stock with still a lot of room to run up insanely higher. If you're in shares, hold. If you're not in shares, maybe buy some. Big cup and handle. I mean, I'm hesitant reading too much into a chart that looks like this because obviously there were stock splits and bizarre stuff occurring, management, whatever the heck. I have no idea specifically. So it's a little hard. I got to take the TA with a grain of salt, but heck, man, sweep this wick up here. That'd be sick. 320. That's what I'm seeing on LEU. Uranium is one of the only commodities that don't have daily spot pricing, only monthly, and uranium has room to the upside as price per pound is just past 76. Absolutely. So we can look at the SP, what is it, SRUF? SRUF. Yeah, Sprott Physical Uranium. There's the monthly. I mean, heck, look at that. Uranium is the future. I mean, there's just no way around it. Nuclear is the future. You cannot avoid it. We will need to put massive investments into uranium. It's a very finite commodity. It takes a long time to mine. There's not a lot of mines. I've been a massive uranium bull, proponent of the super cycle thesis for 3 years now, probably. Way too early, but right. UEC doing great. Nice. I'm in UUU, right? UUU right now. It's my only open position in uranium, but like all of these are insane and look great. Look like they just want to keep going even higher. Just insane. LEU is probably the tightest. They're all so high that it's hard to like not just buy the leader. Like I don't really want to try to play a laggard play in a sector that's going parabolic. That being said, if I were to, it would be this one. DNN, small cap, uranium miner, speculative as heck. I think that it's going. I think that it's going to go much higher. I think it's been range bound for so long while all the other ones are breaking out. UEC is another kind of shitco uranium small cap speculative play, and it's breaking out. So I would like to see DNN follow. If there's any small cap laggard that I would like to play in the space, it is this one. Please buy shares or leaps. Yeah. So, CEG, that's the other high quality one. I called this one out. I never bought it. This is actually pulling back to support. So you could buy this. This is looking good. Back testing the daily trigger really neatly. Just filled in this little low volume area, trading back into this, trying to trade back into this volume shelf. If it gives me 285, I'd be a buy, or 290, sorry, 292, 293. Maybe it sweeps these lows, but probably not. Probably goes right back to the base of this consolidation here, this pivot, 290. So somewhere in there, look for buyers, and this could be a really good one too. But these are it's just, I don't know, crazy extended too. CCJ, yeah, they're great. CCJ, great company. They recently finally, never mind, they did it a long time ago. They broke all-time highs and they're just surging higher. Yeah, this is another blue skies one. Crazy. And I still I have OKLO runners too. I still have some shares of OKLO from 60-ish, 56. Yeah, from 56. So it's holding the weekly 9, which is the daily 50, roughly. So as long as it's holding, like I mentioned with the other leaders, as long as it holds the daily 50, tested it today. I'm kind of spooked, but hey, I'm in. So what else we got, boys? I got to wrap it up here soon, but let's see. Constellation is okay, but is an okay bet by uranium is only one meltdown from crashing. I would love this, Drew. Please give me a crash. I can buy and not look for 5 years because uranium's not going away, and it's a limited resource. And I think that I just want to buy dips and not look. Lithium, great question. What did happen to lithium? I think it's just taking forever and being a bummer. So it's trying to break out of the long-term volume shelf here. Someone just keeps going back and back and back. Yeah. So let's hone this one in. There's the top of it, this peak. And we're going to do this actually in two ways. So this is going to be my resistance band, kind of top of the shelf resistance band. Then we're going to do the point of control, which is the big thing in this color. So that's just this big spike here, this whole big thing here. So see, basing broke out, back tested, parabolic, broke out, or broke down, obviously, holding. It's going to take a while when you have a chart that's moved that much that fast. It's just going to take a while. It could be doing a head and shoulders too, where it comes up to like here, 120, and then still rejects for quite a while, gets stuck in the base. But we are starting to see signs of the bottoming, right? We're seeing the curling of these moving averages. We want to see, let's look for seller exhaustion. Looks like right there, you had the panic. Then here's seller exhaustion. Now the bulls take control short term. Bulls hold the first back test of the key level. And now they're digesting this volume shelf. Next step up will be this one right up here at 94.77 with a bigger target of 120 if they can get it. But it'll start to be working uphill. They'll start to be working up into resistance in this zone. You can also look at LAC for lithium. This one's a little more speculative, actually a lot more speculative. They're a shitco, I believe. But they are beat to heck, and they're finding support off long-term levels. I believe if we go to the monthly, there we go. There's your volume shelf. Previously resistance. There's point of control, all-time point of control on the chart at 275, which it did just. Look at that. 275 all-time point of control. Back tested for 4 weeks now, consolidating off of the bullish news, which sent it out of the bearish consolidation overall, I think. So I think LAC is on the focus list here. Very interesting. Very interesting. Thanks for bringing this one up. Almost forgot about it. All right. Piper asking about gold. Well, I am bullish, and I have been for 2-3 years now. Because long-term patterns, they work really well. So when I see a pattern on a monthly chart that's a massive cup and handle, I go crazy long when it breaks out here. Just over 2,000. So I sold too fast. I got involved in some smaller trades that I don't have a big position in gold. It's an incredibly clean breakout on the monthly. It's going much higher. It's just all right, guys. How into it do you guys want to get? You want because I can give you the whole thesis, I can give you the whole dossier here about what I think is happening, what my thesis has been for the past year or so. This is really like a whole webinar topic. So I'll give you a little teaser, and if you guys like what you're hearing, then I can actually do a whole webinar on this. I'm going to do a series on it. What I think is happening is we are seeing a shift for the first time in, call it 100 years, to a multipolar, de-dollarized geopolitical global economy. What I mean when I say that is, I think we are starting to see the tipping point where the dollar dominance is ending. Dollar dominance will still be maintained for quite a while. I'm not saying BRICS will take over the world next week or month or year or 5 years even. What I am saying is I think we are seeing an inflection point here. I think that we are starting to see a trend in the preparation for the inevitability of the end of dollar dominance as the rest of the world industrializes and continues the process towards becoming members of the global economy. There is going to be a shift in the balance, so to speak. So we're talking like in the last century, let's call it, US economic policy has been to attempt as much as possible to maintain dominance, in terms of the just the overall trade tied to the dollar. Sorry, it's hard to give an elevator pitch for this. Essentially, as third world countries, as the rest of the world, the global South, I think it should be referred to, starts to industrialize and see the benefits of neoliberal policy and essentially the good parts that come with the United States essentially using the global South to mine their resources, to mine their labor. That does come with some upsides, obviously. And the long and short of it is, I believe the dollar is not going to be the ultimate peg like it has been in the past 100 years. I think we are seeing policy shifting towards alternatives, whether it is Bitcoin, whether it is just diversified crypto ETFs and treasuries, whether it is gold, is I think the other obvious, like I'm not saying we're going to go back to the gold standard, but I do think these other stores of value and pins of value, metrics of value are going to start becoming more relevant. So if I were to do a whole webinar on this, if this does interest you guys, we could look into a lot of ratio charts comparing gold and Bitcoin to the dollar and to markets, and to find, to kind of help flesh out that narrative. Because this is not a flippant thesis I have. I'm definitely not saying I'm right, but I have thought about it quite a bit. So there are a lot of implications for this, but the gist is long emerging markets. When this is China and this is the United States, but yet China is surpassing us in many metrics of technological advancements, infrastructure. Just they're doing a lot of things right. I'm not gonna say they're doing things better. That's speculative. Who knows? There's a lot of things they are doing better. Regardless, there is a massive discrepancy in valuation. The market does not like to admit that China is as good as good at it is at what it is good at. For example, Alibaba is your chance to buy a world superpower's leading cutting edge mega cap AI company. Essentially, they're Nvidia. I mean, not exactly, but it's not a crazy. Call it their Microsoft. How about that? You have a chance to buy it at like incredible value. They're more than twice as cheap as U.S. competitors. So this is the big thesis for the next 5 to 10 years. Long emerging markets, the ratio trade is there for a lot of sectors. Look at this is what I'm saying. In the next decade, I think things like this are going to break out. This EWZ chart. This is Brazil. I mean, sheesh, look at this. These are quarterly candles. So these are the long-term cyclical trades that we're talking about in this webinar, right? So this is exactly why I was such an immense gold bull in this 2-year period. Well, this 2-year period, I should say, 2023 to obviously now, because it was a very long-term pattern. Very, very long-term. It was a 15-year pattern that's breaking out, right? And so now you look at Brazil. This is call it a 20-year pattern. When these things move, they will move with a magnitude that will catch everybody off guard. If people think, like, I have people that I know and trust that I strongly disagree with because they're shorting BABA. I'm like, brother, you think it's overextended? Look at this chart. This is just breaking quarterly resistance. This is very likely going to 180, So these are the trades that I'm looking for. These are the trades that I'm trying to put you guys on. This is the trade that I did put my community on. So, all right, enough victory laps. Talk saying Brazil and Japan trades interesting off of the White House tariffs. Absolutely, absolutely. So for Brazil, I'm playing it in a few ways. Right now, I continue to hold NU long. I think this is a beautiful chart long term. We have been long and active since 1220 there, and it is finally starting to work after being a frustrating trade for a couple months. So we're finally getting liftoff here. I would expect a top to sweep here. Here's what I think it's going to do. I think it's going to do, where's my brush? It's going to come up here, make a new high. There's probably going to be a trend line tap. So we will say it's going to overshoot, go like this. Then it's going to make a smaller consolidation here, make another high, and then squeeze, I think. Something like that. Big uppies. All right. So that's how I'm playing it. I missed STNE. This was my other favorite. But I say missed, but look at the long-term chart, right? So these are fintech, Brazilian payment processing, stuff like that. Stone, absolute immense chart. If it breaks the highs here, it should just go crazy. Pags, I think. Pagseguro, yeah. Pagseguro. This one's even more beaten down. So if we do get the rotation into Brazil, look for this stuff like this. The laggards should catch up. If it is not the real announcement quite yet, if it's like this still needs to reload, to shorts to come back in and for bulls to accumulate more, then just recognize that the laggards, they get beaten pretty hard. These moves are not fun. While you're waiting to hold for the big move, you get in at 983 thinking, hey, I'm getting in before the squeeze over $10. And then a month later it's at 780 and you're like, man, I'm down 20%. This sucks. So just be wary of that. But this looks like it's breaking a downtrend line here too. The important thing is look at that volume profile, look at this massive volume shelf, and look at it finding buyers pushing away from it. So this shows that we're probably capping the bottom of the range. And when you have a range this big and you're getting in at the bottom, you want to take a stab. These are incredibly high risk reward plays. Let's see. Oh, you use Stone in Brazil. Nice. Very cool. Sold Meli, Mercado Libre. Yeah, I missed this one. I missed this whole move. I charted it, didn't take it. It's just such a weird, algorithmic channel thing. I thought that this was less constructive than it was, but incredibly constructive. Looks like it wants to go higher to me. Just unicorn. Great stock there. Now that we're talking Meli, let's talk about all right, I'll take my victory lap here. JMIA. This is the Amazon of Africa. And it was a beautiful setup that we took at 246. Actually, I took it at 250 as it was breaking this neckline here. And just holy moly, this is what happens when you catch these cyclical bottoms, right? This is the easiest 3-bagger of my life. I just didn't do anything. I just bought it and it went up because I waited for it to reclaim a major, major, major low. I waited for the panic selling and I waited for buyers to show themselves and they reclaimed a major level. And I said, hey, I think the bottom's in and it might chop me for another while. I was expecting it as a possibility and I got lucky here. It's just luck. But, you take enough setups that look good and is it really luck, when one of them works out amazingly? So yeah, good stuff there. Yeah, JMIA is a fun one. Jumia, yeah. I was talking about IoT in my community. I did not take it. I'm bummed. I was talking about this looking like a slam dunk play off of the IPO high. Said it looked like HIMS where it's double bottoming off the back test after going parabolic off the IPO high. And now it just smashed earnings, of course, off of the confluence of supports. It broke its shelf here. If we look, this was the zone, but the big zone is between these two peaks, right? So now we're essentially, if we break above this, which it sure looks like it's going to, it's holding above it. Yeah. So perfect. There you go. So there's the shelf, right? There's the new point of control shelf. We'll leave that back there, I guess, because it's clean. This looks amazing. If it backtests here, I would be a major buyer. This is IoT. They are Samsara, and they do Internet of Things, as you can tell by the ticker. So this is a major component of sensor SNSR. I'm very bullish on this chart. This is the Internet of Things ETF. It has a lot of companies that manage or that manufacture small, like analog semiconductor type stuff, like ADI, like NXPI, um, RMBS, Rhombus, I think they are. Yeah, Rambus. This is a crazy stock. Look at that. That's probably going to go a lot higher. I'd like a back test first. So JCI, Johnson Controls Instruments. Look at these names. Like these are the quiet, massive winners. The quiet, massive winners that people don't talk about because of Nvidia. But you think Nvidia is great? So is ADI. You know, these charts are both insane. They're just these are a lot less talked about. NXPI, this one I think is setting up in a nice long term channel here, looking to break and tap up higher over 300. So you can get exposure to all of these with the sensor ETF here. I think this is a great long term hold. It doesn't move too explosively, but nice safe bet here. If you want individual names, like I said, I really like IoT, I really like NXPI, and I really like, there's a few more. Slab I like long term. This one's pretty cool. And let me check. There was one more. Oh yeah, LSCC I really like. Yeah, LSCC and IoT are my two favorite ways to play this. That's really clean. We're like tapping right into the 50% of the range, consolidating right under it, right over the 50-month moving average. Is that the 200 week? Yeah, 200 week moving average. Perfect. So like, look, this is a beautiful setup that's starting to materialize here. Maybe it flushes out once more, but it should surge above this and then sweep pretty high. It's got a nice gap to fill right there too, up to 74. So strongly consider this guy. I really like this play here. All right, guys, we've been running long. We have 100 viewers, though. Heck yeah, last time I checked, it was 80. I'm running long and getting more viewers. We like this. Thank you guys so much for the engagement, all the comments. JCI does HVAC. That's interesting. I'm going to go through the comments here, check the rest of them, get through them. If you have any more comments you'd like to talk about charts, get them in now. We've been going 2 hours. Let's go, baby. It is time to wrap up pretty soon here, though. So get the stuff in. Get the stuff in. Okay, let me start going down through these. David saying, Avgo, Broadcom, going back to 300 next week. No brains needed. David, are you a bear? You seem a little bearish, and I respect that. I'm glad to have you in here. Always more. Okay, this is might be with you. I got to see what happens. Bulls would be looking for a post earnings gap setup. We want to see this tightening. We want to see the moving averages rise up. As moving averages go like this, we want to see price go like this, get tighter in a pennant, and we buy the breakout there. Blue sky setup. We need a reason to short blue skies setups. What is a reason to short it? Trading into a major uptrend line and rejecting. So, David, I like this. No brains needed back to 230, he says, or 330, he says, or he says 300. All right, let's talk about it. We have the big gap, right? What I like to do for gaps is I slap a fib on it. Let's do a simple one. All I want to see is the 50. The 50, the area of interest here is 320, confluence with the previous high at 317. So this is the area where I would be looking to short to for the no brains needed part. Then I think brains come in. Then I think we have to figure out whether it's going to find buyers off of here, whether it's going to consider a dip into the gap and into the previous highs as a discount to buy long term. If we go to a higher time frame, I'm not so sure this is done. Might be. But yeah, let's watch it next week. One thing I think you have in your favor is the weakness in Nvidia, the weakness in semiconductors as a sector. They are under the 50-day. We've talked about it a lot today, how important the 50-day is to hold for leaders in the previous market to continue being leaders. Otherwise, there will be rotation. Very interesting stuff. I like it. Let's see. What else here? Yeah, David, if you're already in, banger, great job. Let's see. Riley. Adrian interested in Riley. Riley's been a bummer. I think I'm wrong on Riley. I thought that it was going to pull back and catch with small banks. I thought this was the quite frankly the shittiest of the small caps, and I thought it would squeeze very hard of the regional banks. I thought it had potential to squeeze like crazy. Um, was looking for basically a double to 10. It's got to prove itself again. So we are watching for a higher low. We are watching for support off the weekly trigger here at 478, and honestly, likely a back test of the daily trigger. We have to say this range is no longer valid. I have to move it back to the full breakout range. We are losing the 50 fib. So that means that I kind of gotta be inclined to expect a retrace to the golden pocket here. So we'll watch the confluence of the weekly trigger, the 62 fib around 463 to 475, and likely 430 is an area where I would look to get involved. It also has this imbalance here. And this imbalance roughly aligns with the high of the stage one base, where it was resistance, resistance, then it surges above. So there's the potential for it to deep retrace into the 78 area, the 387. And because that's such a massive move, I can't be involved in this. I can't be involved in something that might stop out or, that might run 23% before I know whether it's going to catch or not, That would be roughly the bottom of this megaphone too. So I can't be bullish here. I wanted to be. I think I'm just wrong. KRE though, love this one. I'd like to see a little bit more of a surge to this major downtrend line. We'll look at the monthly here. Major downtrend line. Didn't quite get there. I'd like to see a surge there, a back test into internal support, and then a big power up. I'm not married to that trajectory, but it's just kind of what I was looking at here. This looks like a constructive chart. I'm not sure. It's not high conviction for me, but I think that this is trying to break out of another base, just like this did kind of right about here. And you can see it also had a long-term downtrend line. Could call it that one that overshot and then started negotiating. Maybe we just squeeze through it like that. So that's something to keep an eye on, the regional banks. Talk mentioning Eaton as well. I believe this was in context of the SNSR because they're definitely a component in electrical components. I associate them with JCI. So like boring electrical components that are needed for stuff because when everything's connected, they're all going to need this stuff. Eaton, amazing unicorn chart. Yep. When I was starting to trade back in like 2020, 2021, this was on all of my scanners for VCP. Like eventually it's going to go crazy, but it was just trading sideways for so long when I looked at it. And then just, proof of concept. Sideways is not bad. Never short a dull market. Let's see. David with the massive win on Lulu puts. And Google in his long. Okay, great. I was about to call you a perma bear, but a smart one. But you got Google in the long. We're all good, brother. I love it. Glad to see you in here. Hope you show up more because I like your take. It's we don't get a lot of bears in here, I found. So we need more of you. You're a dying breed. No, I'm not saying you're actually a bear, but people who are willing to play downside in uptrends. I love that. Yeah, Talk, you mentioned MPWR. I've been watching it. You're right. I think it is just starting. Yeah, look at that. I think it's going to sweep this, and then I don't know what it's going to do. Deep discount before big rip if it does deep discount. Either way. Oh, man. Yeah, I'm not even bullish up here. Or bearish up here, I mean, if it gets up here. Yeah, crazy chart showing accumulation on the move up, it looks like. A lot of big green sticks. Yeah, nice chart there. What else did you get from me there? GEV. So this is another previous leader that I'm seeing if it can hold that 50. This is in the basket that I'm watching real close. Looking a little weak, but it could just be, hey, this is a good opportunity to get in on one of these parabolic movers. Could be like getting in, I don't know, here before another spike up and a bigger pullback. I don't know. I'm watching. I'm not convinced that these leaders can continue leading when they're looking this weak. And there's so many other sectors looking like they want to take the reins. Think about it like this too. SPY. Or how about like this? Like IWM. If the move in SPY, the next leg up, is powered by a major range break of IWM, a major new bull rally in IWM, then why shouldn't there be new leaders, right? Why not? So I'd be open to market ripping off the back of new leaders. I would also be open to more of a blow off using the current leaders. Um, let's see, what do we got? Gurkha mentioning ACN, the software they use to construct chips. Is that what they do? I thought ACN was the Irish like digital like contracting or something. Like it was like software as a service to match people with work or something. Maybe I'm wrong. Their chart looks bad, but it is at the bottom of the range. So it swept this zone, but it's moving away from the point of control up here. I don't like it, but it could catch here. If you have a fundamental case, maybe I'll look into it a little more. I don't see it right now though, but it is in an area of interest and found some buyers. So thanks for the thing. Not talking fabs. I think I was. Is LSCC a fab? I was just looking at things in the SNSR, the Internet of Things sector. I am a very much a tourist in in this subsector, so I don't really know about the fundamentals of any of these more than like very brief, you know, Yahoo News blurbs. Let's see. Adrian, you would kill for the watch list. Well, I can't give it all away for free, brother. I constantly share what I'm watching in my Discord, and I try to do it on Twitter too. It's hard for me to keep up. Definitely come on and spend more time in the Discord, and if you want, not pushing it, but I do have a paid service where you get just signals and all of the stuff, and basically if you're paying me, I'm your personal slave. So you can ask me for watch lists. I'll give you whatever I have. Um, anyways, back to the free content because that's what matters. We're here to turn traders into sustainable. We're teaching y'all how to fish for free. That's what Trade the Pool does. They're a great company. We love them. Like ASML. Yeah, ASML. I was looking ASMLK. No, ASML. Oh, it's shaping up again. Let's remove all these dirty old lines. Start fresh. So what we're watching, I see a lot of indicators leveling out here and catching. And that looks like an inverted head and shoulders. Give it one of those. The head there, and we got our neckline in that zone-ish, something like that. Looks like it's breaking. Looks like it's trying. Is that a wick? That is a wick. Okay. Yeah, so I like ASML. I think these names are starting to like recarve out a bottom. Like SMH is just so extended though that it's hard for me. But like if it can hold here, then sure, I guess. Fine. I don't know. It's like it's hardware too, so it's like I'm more bearish than software. Thank you, David. I like that nickname. I hope that catches on. Sydney Steve, I'll take it. All right. Where do you drop your $20? Come on over to my Discord, and I can direct you to my WAP link there. You can also check out my Twitter handle at Steve Tileman, SteveTeilmann, and it is in the bio there. That being said, I appreciate all that, but I want to keep the focus on Trade the Pool. You guys come on and join their community too. They are really awesome at offering so much free content compared to I've worked with other prop firms. I've traded with a billion other prop firms. These guys are by and far my favorite. It helps that they're honestly good people too. That makes me feel good too. So yeah, come on over, hang out with them. If you want to come over to my place too, absolutely. You're always more than welcome. So thank you so much, guys. Thank you, Danny Dollars. Thank you for being here, guys. I think it's time to call it here unless we got more charts. Okay, never mind. I scroll down, more engagement. You guys are awesome. So we'll keep going. As long as you're here, I'm here. To some extent, we'll do a hard cap in 15 minutes. So MU, yeah, it looks like it's breaking out, doesn't it? Beautiful, 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 beautiful. So this was just a tale of one line telling the whole story of a chart, huh? Anybody who's been with me a while knows you ask me about MU, I say, well, what's it doing at the 200 day? Is it getting rejected at the 200 day? Again and again and again and again. Oh, it's not getting rejected at the 200 day anymore? Oh, I'm bullish now. It's that simple, right? So what do we do now? If we break out here, we target cleaning up the poor highs up here. So we have an imbalance there in the gap. We have a candle imbalance there on the daily. We have a fair value gap there. We have a setup for a low liquidity run type squeeze up to 150 at least. There will be some sellers there. I see these single prints that could act as resistance if we get up there, but might want to get retested. I think they would. So yeah, next target 150, let's call it. Love this. Good for MU. Love this name. Long term, this is what matters. There's another tale of one level, right? Previous high from the 2000s from the dot-com bubble, pardon me, and then 1-2 tests here, fail. Then massive parabolic move up, undercut hard into old support, scare everybody, we're going to zero. Then power reclaim. This was all accumulation long term. We're over the thing, we're going higher. So now we play the extensions game. We slap on extensions fibs. For the people in the back, what are our extensions fibs? The 1.27. That's our make or break. We either reject there or we go ripping on to the 1.6. Then find price acceptance there. We can entertain a 2. And we can get really crazy and go for the 2.6, but that's rare. So the MU. We can also slap one of these little guys on. These are fun. A little parabolic action there, holding. Anyways, what we look for is 150, small pullback, push up, sweep the highs, and probably surge to 183 is our long-term target. There we watch. There we take profit and watch. If you're just a buy and hold and you have ultra conviction that Micron is going to go much higher, then you just hold to trim over 200. We like it. We like the stock. Okay. Adrian saying on Riley, you're looking for a cuts move, quick and painless. It's just so beat on and it's not acting right. I don't know, man. I don't know. Maybe this is the time to buy because I got shook out and it's trading into the support zone of this range if it holds. So maybe I'm cautiously bullish if it holds 475. How about that? That sounds good. That's point of control too. So yeah, sure. I'm bullish over that. And if so, it can get really explosive moves. Retest the high of the volume shelf, and that's already up to $6. That's a 20% move. Yeah, 22% move. Yeah. So let's see. David mentioning C, can't hurt to load up on C, JPM, risky business, and Riley. Yeah, absolutely. You can get smoked. C is, this one sucks for me because I charted this out as a mega high conviction play months ago, and I just didn't touch it. You have 1, 2, 3, 4 knocking. Should break through after it 4 knocks. High conviction setup with a massive range. Look at this thing. It never recovered at all from the bank stuff, bank stuff at 2008, the bank stuff. Anyways, this is a massive stage 1 base that's just breaking out. We have rate cuts on the table. Like, why would you not love Citibank here? It was a major bull down here. I'm more of a bull up here. It's hard for me to buy it here right now, right here. But honestly, it doesn't look that bad. It looks like it's a ascending triangle. Fine, I'll buy it here. I don't even care. It's an ascending triangle. I like it. So we buy off of the rising support. We want to see buyers 94.20 to 94.80. That is the zone I would be looking to buy. Trades back into the wicks here, trades back into this expansion candle. It should not lose these wicks. If it loses these wicks, I'm out. So that is good risk reward. This is how you play extensions, guys. This is how you play extensions without getting caught in massive drawdown. You pick your spot, you find your zone. If it doesn't work, you take a 2% stop out. I could do this every day of my life and be fine because I just need to catch one. And there you go, So there's your risk reward. You can get a little more granular. You can say, here is the range of the ascending triangle that I'm framing my trade around. Therefore, could reject at 100. That makes sense. should go to 102.50 or 105. So there's your short-term targets for like options or whatever, long-term, whatever, you know. So if you trim a little bit up it here at 105, so you get the immediate small pattern breakout gets the measured move to 2. You take half your position off at 105 and you would buy it back at 100 if it finds support there. You free roll the trade, you're a winner, and you can just hold that core position unless it loses this or it goes to, you know, whatever crazy extension level you want. Because when you have this much room, you can look at this wide range here and say, okay, well, we would draw this one from that low to this high, and then we can say, okay, it's consolidating and finding price acceptance over the stop run fib, this 1.72, and that was at 94. So now we should expect a very clean move to 103. We have confluence between the 1.6 of this ascending triangle breakout there. So, yeah, very, very kind of brainless trade, honestly. I like it. I like it. Thought I didn't like it, but I like it. Cool. Talk. I'm never going to get to start my weekend. You just keep throwing cool stuff at me here. Okay, mergers and acquisitions sector, PJT, Evercore, Apollo, AP. What is Apollo? APLO? Is that right? AP Apollo. How do you spell Apollo? That can't be it. Oh my god, you guys keep commenting. I can't keep up. Okay. Um Adrian, absolutely. I'm gonna reach out to me on Discord or Twitter or anywhere, and I'll get you all set up. I appreciate that. Okay, so I'm gonna give up on this one. Talk. I will look into this later. Michael Anthony mentioning GLW. I saw flow on this one as well on my weekly scanner. So I mean, heck, what do I do with this chart, man? I was charting it down here and it left without me. So looks amazing. I can't buy it. If it sets up, I'd buy it. Yeah, GLW is Corning. Yes. They're to make products from the Kentucky plant. Interesting. Okay. Um, David saying, at some point, you need to really explain this fib strategy to me in 5 minutes because I get lost. Absolutely. I'd be more than happy to. That being said, David, check out my go to Trade the Pool's YouTube channel, go to their playlists. You'll find all of my webinars and look for my one on fib strategies. I talk about all this in detail. It's was a little earlier when I started to do the presentation, so it might be a little bit rough around the edges, but the information is very solid. It's all the same. Definitely go check that out if you're interested. If not, yeah, hit me up on Discord, either mine or Trade the Pools, and I'd be more than happy to talk there too. Let's see. What else we got? Talk giving more fundamental information about banking, financials. Wells just had a regulatory infraction and lifted, so it seems like the general climate is dovish. If we're talking banks, SoFi seems super stable for an investment. Yeah, SoFi's great. SoFi was a major bull. I was charting it down at 16. I bought a little bit and I sold it too fast because they were options, and I said I got my 400% on a $50 contract. I'm good, whatever. I think the big target just swept for these major highs, and now it's starting to consolidate. These are just scribbles. I don't really actually know if it's going to do this, but just some kind of consolidation up here before pushing much higher long term. This is a long term base. Its whole thing. Once it gets through all time highs, it should be blue skies. This will be $100 company in the next 5-10 years, I bet. Yeah, very bullish on SoFi for sure. Yeah, much more to go. I agree. It's just about how it gets there. It's a grinder, though. Let's see. All right. Toxing watch Circle. They applied for a bank charter. Interesting. That's interesting. Whoa. Okay. Circles. Are we buying this? We had the buy range yet? Shout out the homie Roperito who shorted at 200 and no, at 180 and got taken for a ride, but held. So shout out to him. We are back in the weekly imbalances where it broke out from. Okay, look, we're back at the initial consolidation range, the bottom of the value area. Does it need to undercut? Does it need to go down here? Or is this valid support? So I don't know the timeline for bank charters. I figure it's not a very fast process. If I recall anything from what it was like to be a SoFi bull back on around the IPO or a year after the IPO or so. So I'll have to look into the fundamentals on regarding that, or the timeline at least. Technicals wise, this is starting to get interesting. I would like to see what it does at 100. If it could undercut 100 and then reclaim 100, that could be really nice. Keep an eye there. APO, thank you. That's Apollo. All right. Wait, they're acquisitions? I thought they were energy. Oh, Apollo Global Management. I'm thinking of Apache APA. That's what I'm thinking of. Okay. All right. You like this chart. Maybe I just need to zoom out. I don't know what they're acquiring. So I don't know. Looks a little sus. Rejecting this 137.5, 134.7 point of control makes me think it might want to retest down a little bit to 125 at least. I don't have a strong feeling on this chart, to be honest. All right, you have the base, you have a squeeze, it back tests the base, holds, double test the base maybe. So 120, if 120 holds, I might like it. Interesting. Okay, Michael Anthony saying Zeta. If you guys could give me like a one sentence thesis, that would be great, because I can't go over literally everything and I don't know what the heck most of these are. Zeta, Global Holdings. Okay, we're still talking Global Holdings. I'm sorry. Cool. If we're talking Global Holdings, MFI, I think they're one. This one's kind of interesting too. Might be time to buy on this dip out. Oh, my second monitor might have died. Did you guys lose me there? Lose my charts? No, you still got me. Perfect. Excellent. MFI is interesting. There's one more. Let me check my watch list. FLG, I believe it was. Yeah, FLG. This one looks really cool. I don't know what they do yet. I need to look into it. But this one's very, very compelling to me for the same reason as a lot of these. Look at this volume shelf that it's pushing out of, and we can do, so that's the core volume shelf. Then I like to do like the to the top of the shelf here, and this is like the zone where like it needs to like power through it, right? Otherwise, it can just like reject it a little bit over the point of control. Where is it? Order block. There we go. So see, like it wasn't ready now, so it's going to reject there. Wasn't ready now, it's going to reject there. Almost, but still not quite. Wasn't ready. Now we're starting to push above that. That top of the volume shelf, we should see expansion pretty soon here. The only thing we have to worry about is another rejection like this. So we're watching a close over this high. This is a cool one to keep an eye on. I don't know what they do yet, though, and I should probably know that for acquisitions companies, mergers and acquisitions. So, okay. Moving on. STM, Michael Anthony, thank you for all the tickers. Feel free to let me know what you like about this. For me, I like this. So you do this long enough, you just kind of recognize instantly, like whether you like something or not. So you have this big volume shelf here, this point of interest, point of control, whatever you want to call it. Undercut it, reclaim, back testing, looking like it's holding. I want to go out further though, get more context. Should really always start at the monthly and work back. So okay, I see. So this is why you got to zoom out, because the actual volume shelf starts there, goes down to the point of control there or so. And yeah, that is what we revisited and retested. So this is the valid support. This is a zone of previous resistance. So intermediate resistance, less important than this, but still valid. And it seems like we're double bottoming off of that, or at least trying to. So I do like this. STM microelectronics. Okay, so similar to the stuff that we're talking about, probably generally similar to like analog components, Internet of Things stuff. Long term, it looks good. It's back testing its major, like, decade long base, and it seems to be catching and pushing. So on a daily, we should be able to see. Yeah, look at that. The 200 day is catching. I like this one. I'm adding this to my watch list. I'm gonna sort this thing. It's been a long week, just throwing stuff in it. All right, real quick, let's see what Oscar's doing after hours. Holding, nice, cool. Just wanted to see if it was potentially squeezing. Hinge being a shitter. Okay. Oh, this one. I was stalking this and I missed it. I got shook out of my call. I'm mad. But this one should have major legs here. Four knocked this handle of the major base. Surged up to just swept the first target. Next target is going to be 50. Man, that one stings. All right. Oh, there's. I didn't even. Wait, that's actually wild. So, Adrian, swear, hand to God, I just was reading comments one at a time, saw Michael Anthony's, switched to my charts, saw you on my watch list. I come back here and you're saying the same thing I am. So, yeah, absolutely. You is breaking out. Amazing, amazing. Gherkin, that's very kind. Thank you so much for tuning in from Germany. That means the world to me. No pun intended. So great to see more people, more faces coming in. Oh, the Piper tuning in from London, checking out. Thank you so much. You're probably gone now, but it means a lot. Awesome. Thank you guys. Let's see. Yep, David's right. Microcaps are very risky, especially for swings. If you're not scalping these, you better be trading small. Is all I have to say, because I've seen many a good person get trapped, and it's no fun. Um, yeah, Adrian saying circle looks tempting. Would still go for BMNR. I like BMNR. I took a paper cut. I took a position and got stopped out last week. I think that there is huge upside, which makes me fine with taking a couple small stop outs because I'm trading very small size on these because they're so volatile. Um, I'm also considering in my Roth just buying some, and if it goes down, just buying more because I don't want to touch anything in there for years anyway. And I think this is a good way to play crypto, or Ethereum in particular. Big money in Asia. I have some not big connects, but minor connects in the Asian finance like community, and apparently they are going crazy looking for places to invest in Ethereum, so treasuries and stuff. So I've been looking around, shopping around at some different names, and there's one I really like. Where did it go though? 10B is one of them. It's not my favorite, but I'm keeping an eye on this one. This is like very interesting. BTBC maybe BTB. Shoot, I will have to find this later because I'm swimming in my watch list here. I don't know where it ended up. Yeah, I can't find it. RXRX is very appealing for a very long term position. I think it's putting in a spring on a Wyckoff. Not 100% though, but I think you can long it here with stops under the low. Even then, it's a big loss though. So this is like one of those Roths. Buy some. If it doesn't work, buy more. Never look at it. Assume that the technology works. Assume that the institutional accumulation will eventually play out, and just not risk more than you're willing to lose if it doesn't. So yeah, that's one that I have like maybe 500 or $1,000 worth of in my Roth, and I'm just not looking yet. But I'm thinking of actually building a substantial position there. Um, yeah, Lee's constantly pumping BMNR. The other one to keep on your watch list is SBet, Sportsbet, or not Sportsbet, SharpLink Gaming. Uh, Also, they pivoted into Ethereum Treasury. They're at a deep discount right now. Their chart is a little more mature than BMNR's, but I think that it's less explosive than BMNR. So, yeah, there's that to consider. All right, guys, I'm starting to burn out, so I'm going to just power through the rest here. We're going to do lightning round. We're going to do not lightning round for branding, or don't sue us, Jim Cramer. We're going to do fast stock picks here. KTOS. Love this name. Did not hold. I should have held. I was very involved in the much lower range, as you can see from my crayons way down here. Anyways, absolute unicorn, parabolic mover. This is going to be one of the future mega caps of um, the defense industry, you know? So this will be, more and more and more considered in the conversation with the LMTs, the LHXs, the RTXs. I would argue they are in the new category of more technical or technological warfare, drone based stuff, obviously, autonomous. So names like who is it? I cannot think of the weapon drone manufacturer right now, but there's a few of them that are going crazy. Those are names that you should look at for long term investments. This one's overextended. I can't buy it here. Not convinced it goes down much, but I can't expect it to hold this level. What you could look at is maybe like some uptrend line back test. If this holds, this is kind of like a Bitcoin type uptrend line where it could flag out over here and correct via time for a year or so. That's something to consider. Yeah, Katos, great trade, great name. Adrian, yep, this is my thesis. Has been since tariffs hit. Software will probably outrun hardware, and we can watch that by looking at IGV, which looks like it is pretty primed here. I think that's a nice consolidation back into internal support after making a new high. And then more importantly, we can look at IGV over SOX or SMH, one of those two. And what we can see is a potential backtest of a very key level here. This is the thesis of my trade initially, seeing software's relative strength flag and start to break out. And then that did get reverted. But here's the thing, when you're trying to buck a decade, 5-6 year long trend, there's going to be shakeouts. It's going to have some noise and consolidation. And this looks like a back test on the monthly chart here for me. I'm not sure yet, but this is a nice. Where's the wick? Why won't it show? There's a wick there. There's some indicator that's hiding that. Let's see. Whoops. All right, I don't know what it is. Whatever. There's the wick. Okay, so as long as it holds this, I'm pretty sure we are seeing a higher low. We're seeing a back test of this channel, and it would make sense logically, fundamentally, narrative driven wise, why software should outperform. So that's kind of my thesis there, and whoops. If we look at the daily here, I bet it's going to show. Yeah, mixed tape. So try to break out back testing and finding a little bit of buyers here. So we'll see. I think that we are still on track for that thesis to play out for the next couple years. Talk saying shorted the government housing in December. Oh, and went long FMNA and FMC. I see. Very nice. Beautiful. Made some money on, scalped some points on Lulu. Very nice. Good job. David saying if Ethereum pulls back 15%, then we are buyers. I'm a buyer up here, but if it pulls back 15%, I'm a big buyer. If it pulls back 15% from here, it will be back testing the previous internal range that it broke out to all-time highs from, or not all-time highs, well, FA all-time highs. Did we secure all times? Yeah, we did. Okay, yeah. So I mean, we did the thing. We got the all-time highs. We swept. A 15% pullback would put us right back into like, what are you looking for? Like 4K handle? Deeper? Okay, 3,600 or so. Yeah, fine. Yeah, the top of this mattress top of resistance flipped support. Yeah, absolutely. Totally with you. Yeah, let's see. BTBT, thank you. I think that was the name I was thinking of. BTBT. That's definitely one of them. There was some weird insider sells or something this week, so I'm not ready to buy. I want to keep an eye on it. I might knife out again. This is one to keep an eye on. It's trying. I don't think it's ready, but it's trying. Um, David's reading my mind. Nicest, yeah, nicest ETF is PSIL. That's psychedelics. I love this name, or this ETF. Man, look at that, so pretty. It's finally doing the thing. All right, so did we get the breakout today, or it's oh, it's so close. Yeah, okay. So there you go. There you go. Listen to David. Let me take a nap. Buy PSAIL. Be happy. So that should mean MindMed is doing well. This is my favorite in the space. If you want an individual name, MindMed's underperforming. This is interesting. I like them both. I might buy half and half. I need to look at more individual names. I know Michael Noss, CMT from Trade the Pool. He is the man. He has been all over these names, and he what was I going to say? He knows a lot more about the intricacies of the sector and the individual names. So does Mitch, Big Money Mitch. So yeah, I'm going to ask them next time I talk to them what they think about individual names, and I'll keep looking. But PSIL is the no-brainer. Oh man, we are close. Toxing, IBIT over Baito. Yes, I agree. VKTX is our YOLO GLP-1. Yes, I agree. It's the time for biotech YOLOs. So this was mine that I missed, and I'm gonna cry. I'm gonna cry. I should have hammered it yesterday. I just didn't. I thought it might pull back a little more. It did pull back where I wanted at the 18 handle. I freaking missed it. It's now going to break out. It's going to do the thing. I love this name. If it sets up again, I will take a position. I'm looking for more biotech. If anybody has any, let me know. That hasn't already run like crazy. VKTX is what we were pulling up. So this is his GLP play. We can also look at NVO because they're at deep discount right now, and so is HIMS. So you have some options here. I like this long-term volume shelf. Look at that. Look at that. Isn't it beautiful? It went parabolic. It pulled back parabolically. It went mega parabolic. Pulled back mega parabolically, holding previous high. So, yeah, I like it. This thing is just crazy. So I wouldn't take a big size on it. NVO just beat like a dog. Man, this thing's rough. So we are looking for our major range pullbacks. Flip this old fib around. We tagged the stop run and we found support, and that was confluence with this shelf. So long term, I think NVO is a buy. And I would be wrong if it loses this. So that's pretty decent risk reward, I'd say, because you'd be targeting minimum 70, likely 85, potentially 100. So that's one way to play. I think I might just like HIMS with the show of force recently this week. It bucked the breakdown. It held the range. I think it's doing this. I think that we get a trade back up to the 60s, and potentially it does the big thing then, because I mean, let's remember, big picture, if this red candle didn't kill it and this red candle didn't kill it, I'm not sure this red candle kills it. This was a 40% drawdown. This was a 30% drawdown. This is a 50% drawdown. It's a 40% drawdown. I think it's time to buy it. So yeah, that's kind of where I'm at on the GLP names. All right, Adrian, you get some sleep, brother. If it's 2 a.m. there, take care, brother. Have a great night. Good to see you. Hope to see you more in the subreddit, or I'm sorry, the Discord. And let's see. Okay, powering through here. God, I love the engagement. I actually really am enjoying this. So that's why I'm still here. I'm glad you guys are too. So David saying Palantir light like Archer, Arcat. Steve thinking of, did I just have a stroke? Palantir. I was bullish this week until I was day trading it. The massive sell into the daily trigger makes me still. I'm agnostic on this. It's stuck in this big shelf. I think it honestly could go either way. I am seeing consistent flow, and I think it might be one of those situations where it looks like it's going to break down, and everybody thinks it's going to break down, and then it just reverts back up. I'm minorly bullish, cautiously bullish on Palantir. ACHR, this one, frustrated. My target was 14. I was in at 10.27. Only took a little bit of profit. Really not much at all. I think like a quarter of it, and then I got stopped out. Break even. It needs to reset. I don't know. This is what I thought it was going to do. I was very wrong. Thought I was going to do a Joby. Cautiously, I got to wait and see on Archer. It's rejecting this point. I'm not really interested until it can post a monthly candle above 1050. That's what I care about. Because then when it can, then it starts to look like a QBTS type setup. See, where it's the same thing. Once, see, it fails 4 times to post a move over this. And each time it's like massive 50%, 30% drawdowns. You can't hold through that. But when it gets the breakthrough, you can trade it with momentum through there and you get a big momentum squeeze. So, yep. AVAV, another very high quality one. Coming back into potential support. We can watch it in this zone, see if it holds. We'll watch the weekly trigger at 213 for a reclaim. It might need a gap fill to 195. If you can buy this at 200, under 200, probably a buy. Katos could fall to 25. Yep, it's parabolic. It could half itself and still double. Absolutely. Joby over Archer, probably. Quality-wise, absolutely. In terms of valuation, yeah, Joby came down. Buy Joby, don't touch Archer. That's good advice. Buy the leader on a pullback. What else do we got? RCat, interesting name. Red Cat in the autonomous space. This is speculative, but I do like it. It's been a while since I looked at it. Yeah, I like that. Look at the Bollinger Bands getting nice and tight there. I like this a lot. I would like to see one more flush down under 8, and I'd like to see buyers reclaim 8. You could buy the reclaim of 8. Yeah, buy the reclaim of 8. I agree. BTBT looks scary. Grab also looks scary to me. Grab is an Asia play on everything. Yeah, Grab is so they're like DoorDash for Southeast Asia. Uber owns a stake in them. They will double. Oh wow, it's turning around. It looks much better than it did a few days ago. Okay, yeah. It will double. I like it, but it's a teaser, It could take quite a while and really mess with you. But I'm a massive bull long term. I think I have a few shares left in my Roth. I bought $4 at one point, I think, before the breakout, and then it broke out and looked like it was going parabolic, and then Wall Street Bets got on my play and killed it. I didn't even buy more when it went under. I should have. Anyways, I like Grab. They're a quality company, and don't let their. Hear me out. Grab is like Rick and Morty, and by that I mean it's a great show, but the fan base ruins it. So don't listen to the fan base. But yeah, I don't know. It could take longer because there's so many dumb retail involved in it, but it's actually a very high quality company. David saying he owns all the ones in PSIL. Okay, you're the guy to talk to. I might ping you or something because I'm curious about the sector. I want to learn more. Noss is the man. Absolutely love Michael Noss. Yeah, they both are. Mitch is amazing too. But yeah, Michael is just an absolute repository of information. You ask him about anything technicals, and he'll just say, yeah, I have something really interesting that you probably have never heard before. All right, Sage and SUPN mentioned by David. Had Sage bought by it's some acquisition. All right, I'm not going to check it. Okay, him's going nowhere soon. Yeah, maybe, I don't know. We'll see. Got some Hims bears. We'll see. 60, then 40, then 100. How about that? All right. David, I don't hate you, but I do disagree. You have 8K in puts in Tesla. I hope it works for you. I'm a bull. I have some Tesla long right now. What I see on Tesla is it looks like constructive basing on the weekly. It looks like a clean pennant break, and it's not explosive out of the pennant break, so it could be failure. That's fair. I'm waiting for volume. Still consolidating in volume. The weekly Bollinger Bands are still squeezing, so it's just kind of dormant right now, just like a dormant volcano. I think it wants to reach up to meme level, and I get my 420.69 sell, and then I'm totally open to a pretty substantial pullback or double top. I think Tesla is just not. I think it's one of the most widely misunderstood stocks in the market. I think that everybody assumes that it is either a massively overvalued car company or they're um, I think a better way to look at it is they are a potential people say they're massively overvalued car company or massively overvalued AI robotics company. I think they're just a potential moonshot, and more relevantly, they are a play on the continuation of the the criminal hegemony of the United States. Honestly, like I mean, as long as the age of grift is good, Tesla will do well. I don't care if Elon and Trump break up and get back together 20 times. Like if we are in a, not to ruffle feathers, but a late stage capitalist, like I mean, as era where like we have Lutnick, his sons own a company. He passes policy that's insane. And then his sons have a holding company where you can literally bet on whether the policy's going, like the stuff like that. Like, come on, let's be real. That's not functioning as intended. So as long as that is the case, I can't be bearish Tesla. And there's the off chance that they actually do what they say, and they have some amazing tech. Um, we really I'm not in the business of underestimating speculative growth in disruptive industries. Let's put it like that. Um, it's going to be a big market. AI, robotics, like robotics, specifically the humanoid kind of ones that they're working on. Very cool stuff. Somebody's got to win. If it's them, it's massive. Yeah, David, the Uber stake and grab is one of the biggest reasons that I like them. Uber does not make bad investments historically. So, what else we got? Yeah, David, I respect it. You're right on the risk reward. Like there are much worse things to have a big put position on. Yeah, like you said, could get paid massively overnight, and if nothing else, it's a hedge. Yeah, AI, robots, energy, exactly. You name it, they have it. So yeah, yeah, he's nuts. He's a genius. I think. Um, David, your comments make me laugh. Yeah, Elon's he's a psycho. He's an insane narcissistic man child who martingaled his way into success and now thinks he's the next coming of Christ. That being said, he lets his employees build cool shit, and that's all that really matters. He's in the right circles and they're building cool stuff. That's the only reason I'm so like I'm like Zen mode beyond the narratives for Tesla. It's like I've done the whole thing. I thought Elon was super cool 5 years ago. I thought he was the giant biggest asshole. Well, I still do, but it's just like it doesn't trigger me emotionally because the stock's so much fun to trade. So David, I do understand you rage trade Tesla. I respect that. I respect that. Don't take my bullishness of Tesla as even the remotest what do you call it? Uh Wow, my brain is fried. Endorsement. There you go. Endorsement of the man. Yeah, he's Rain Man without any of the charm of Dustin Hoffman. Okay. Yeah, if Dustin Hoffman was just a fascist. Okay, sorry, I'm getting political. Um, Doc, you're killing me. Okay. Okay. All right. Yeah. Okay. All right, I'm gonna call it, guys. This has been a lot of fun. I finally got to the bottom of chat. This is big. Got to the bottom of chat. We did not cap it where I said I was, but you know what? If you guys are still here, I love that. Means a lot to me. I had a lot of fun. So guys, come join me next week. We're gonna be doing another one of these. You know where to find me during the week at Trade the Pools Discord or at my Discord server. You can find mine at my Twitter handle. Look in the bio. That is Steve Tileman, SteveTeilmann. Thank you so much for joining me. I'll slap it back on my face here just real quick. Here I am. Okay. Thank you guys. Have an amazing weekend. We're going to be trading next week. So come hang out, guys. Take care. Have a great week.